Yo, yo. I think we're live. We're live. We're here. All right, let's go. I'm pretty stoked. I think before our first guest comes on, we're going to be talking about the A16Z 2025 State of Crypto report that just came out. Pretty cool stuff. This report comes out every year, and Chris Dixon's ghostwriter did a hell of a job with this one. So we're going to go through it. Our team in the back, let's get it up whenever we get a chance. And we're going to kind of give you guys some first reactions, first impressions as we're digging in. We've also got a great show. You guys have probably seen. We've got Santiago Santos, great guy, and great business guy as well. The founder of Inversion Capital, the private equity firm focused on crypto. Every time he comes on, he's telling us about how he's going to acquire the second largest telecom company in Latin America. And I am excited to get his update on this. He is also going to be joined by Mike Horton of GEODNET, which has a token that's live. You guys stay tuned for that one because there is going to be some alpha that drops. And Santiago and Mike are both building in the DePIN arena. Very exciting conversation there. Later, we're going to be joined by the Galaxy guys, Galaxy Ventures. We're going to get Mike, and we're going to get his coworker from Galaxy on the show. Very excited to spend some time with the Galaxy guys as these guys are just continuing to push. I just got an email about Galaxy's Q3 earnings results. And Mike Novogratz, the founder and CEO of Galaxy, said the third quarter was the best quarter in Galaxy's history. Great opportunity to chat with the Galaxy guys. The GeoDNet team is in the chat. Can we get the A16Z State of Crypto report up as we go live before we kick over to Santi and our first couple of guests? Let's see. Should have it up now. There we go. The State of Crypto 2025. As you can see, this is a pretty exciting report. We're going to get some more brightness going. Important disclosures, A16Z, they want you to know that they are doing things the right way. Let's see. We've got a ton of exciting things. So crypto market is big and growing. I think we knew that. You see trillions as the footer of every tweet on the timeline. And so, yes, it is big. We are in the scale of billions. We have not yet hit trillions, but we're getting there. Stablecoins have gone mainstream. That is real. It is a stablecoin super cycle. The world is coming on chain. All of this table of contents is just incredibly bullish, one after another. Infrastructure is almost ready for prime time. AI and crypto are converging. I would also posit that Wall Street and crypto are converging. I think that is not too controversial. Crypto industry in America is stronger than ever. I think we know why. Introducing the new State of Crypto dashboard and what's next for crypto. Guys, there's 54 pages as a result of this. And so we're just going to try to pick out some of the highlights. The crypto market develops in cycles. Is A16Z calling the 4-year cycle? Let's see what we got here. A feedback loop between prices, developers, and users. We know this. So we see some of the cycles here, the ICO boom in 2017, DeFi summer, and the NFT surge in 2021. Bitcoin ETF led to a spur of growth, and then meme coin mania, regulatory shift, stable coins going forward could have an outsized impact on developers. We're also going to see 150 plus ETFs go live almost imminently as soon as the government opens after their shutdown. If you guys missed it, James Seifert came on from Bloomberg. He's the ETF guy along with Eric Balanchunas. They each described how they're looking at the ETF landscape post-government reopening. That's really the only catalyst that we're waiting on. ETFs and meme coins had an outsized impact on users. We could also see these two particular categories have an outside impact on developers. Bitcoin still dominates. I saw a tweet from Ben Cohen today that said Bitcoin dominance is upwards of 60%, and it's on the rise, and we're going to continue to see it rise over the coming months. This is quite the take. Obviously, it was in a decline going from 2014. Ethereum launched. This led to the spur of new coins, ERC20s, Cambrian explosion of new tokens. This ultimately developed, and we got more and more tokens as a result of this, Bitcoin dominance fell and fell. Bitcoin still continues to represent more than half of crypto's total market cap. You guys wouldn't know that because CT doesn't own any Bitcoin. We're going to keep moving along here. US tech companies and global commodities, they like Bitcoin as an anchor to the modern economy. Gold, obviously $30 trillion market cap on an absolute run. Bitcoin is up there about, let's see, right between Amazon and Meta. And so I think this gives us, the sentiment around Bitcoin. It can do both, get you an asset that can do both. It can be a dollar, a safe haven asset, an inflation hedge, just like gold. We're seeing uncertainty in the market. Gold is running. We can have Bitcoin act as a similar commodity. At the same time, Bitcoin it can also act as a tech stock, an explosive growth tech stock at that. And you can see it valued as such. Obviously, we liken this to gold, digital gold as a store of value. Bitcoin has monetary properties, and that's why you can see Bitcoin is an 11x away from gold. That is the target that we're continuing to stretch. I do believe Bitcoin will flip gold in the near future. Stable coins will continue to proliferate. Eventually, we'll see Bitcoin eat the entire market cap of stable coins as well. Quadrillions. Let's keep moving. Macro forces matter. Sometimes Bitcoin acts like a safe haven asset, sometimes like a risk asset. Boy, you ever watch a sports game and you just say exactly what the announcer is going to say? That's exactly how I feel right now. Exactly. Sometimes Bitcoin acts like a safe haven asset. Sometimes it acts like a risk asset. Right now, it's valued like a growth asset, like a technology company. It's sandwiched right between Meta and Amazon. It can also act as a safe haven. That's why we're valuing it comparable to gold. And so like we can see here, the Pearson correlation is really low when it comes to gold, but really high when it comes to NASDAQ. And so, we can see the correlation here. At the moment, Bitcoin, gold, and the NASDAQ are all up and to the right. Even though the Fed funds target rate has grown, you can see that black line on the chart here. Yields have gone up, and we expect those yields to come down. And we know what happens when risk assets react to yields coming down. Crypto is global, but on-chain activity is growing fastest in developing countries. This is pretty exciting. This gets us back to some of the core ideological benefits of crypto to begin with. The fact that underbanked and unbanked societies can now have access to finance at internet speed. This is particularly exciting because I think this opens up global finance for all. No surprise here that crypto is growing fastest in developing countries. The other in this chart on the left is growing in particular. The United States, it's actually kind of flatlined between 2018, 2019, it's ebbed and flowed a little bit, but it's actually decreased in market share as a global crypto economy has taken hold. We've seen countries like Nigeria grow significantly since 2020. What's that green one? Argentina has grown significantly. And we're going to also see more and more growth spur as these countries grow. Let's see. We're going to keep moving along here. This is some great stuff in here. Crypto is multi-chain with Ethereum and its L2, Solana, and Bitcoin attracting the most developers. I think we knew this. Top blockchains by builder interest, Ethereum-based Solana. Top blockchains by monthly open source developers, Ethereum, Solana, Bitcoin. Pretty interesting to see Bitcoin up on the list on both builder interest and open source developers. Any surprises here? Polygon up on this list as well. Cosmos, Polkadot, open source developers up there. Hyperliquid by builder interest. I think that's pretty cool. And then obviously we can see here this orange view live button. That is the State of Crypto dashboard that we saw on the table of contents, I believe. If you go to this PDF, you can click the view live, you can go to the dashboard, and you can view some of these charts as they update in real time. Honestly, with these two charts, top 5, no surprises. Bottom 5, you see some sleepers, Hyperliquid there, top 10 in builder interest. What else we got? We estimate that the number of monthly active crypto users has grown from 40 to 70 million. 716 million global crypto owners. That represents people who own crypto but do not necessarily transact on chain. We call these people crypto curious. They might own crypto on a centralized exchange. They operate it like a brokerage account. They don't really go and operate and use the chain or self-custody. That is really the differentiation when we see this, when we see these kind of concentric circles. This is also really helpful for builders as they start to understand the demographic of users that they should be targeting. And you can kind of niche down as we develop closer and closer. Before we bring in the guests, let's speed run a couple more things here. 180 million monthly active users, monthly active addresses, 40 to 70 estimated monthly active users. The number of unique people who transact on chain monthly, 40 to 70 million. 10 million users added in the last year. We're seeing this growth. I'd love to see what the percent over percent growth for monthly on-chain active users is, but 10 million, I think that's about 25% overall. Year of institutional adoption. Some of the largest financial institutions are embracing crypto. Wall Street and crypto are converging. Circle, Robinhood, BlackRock, shout out to Securitize. BlackRock and Securitize launched 𝘵𝘪. This was a massive pop. Now, obviously, we're seeing everyone come after BlackRock and try to run on the coattails of all of this bullishness entering the industry. JP Morgan just cut the ribbon on their Midtown Manhattan office. Them and Morgan Stanley, Revolut, Stripe, Visa, obviously making a huge foray into the crypto market. Institutional capital is flowing into Bitcoin. Bitcoin and Ethereum ETFs hold over $175 billion on chain. Wow. I mean, this is what we're looking at when it comes to the adoption. It's just super exciting. Because ultimately we're going to have a Cambrian explosion of ETFs that come in over the coming months. I really think once the government is reopened, we're going to see a massive onslaught of ETFs. I'm really curious to see whether or not this is going to be a bullish or a bearish thing. Liquidity is obviously going to flood. We're going to get a surplus of these assets in public markets. Will there be demand for the long tail of assets when it comes to these ETFs? That's what we're going to find out. BlackRock's iShares Bitcoin Trust, IBIT, was the world's fastest ETF to get to 10 billion, 25 billion, and 50 billion in AUM. These are some of the top performing ETFs ever that have ever launched on public markets. Bitcoin and IBIT hold that title. We're going to see if the long tail of assets also hold that title. Maybe we'll come back to this chart because there's 54 slides here. We're only through 15. Publicly traded treasury companies have burst onto the scene. Bitcoin holdings, we obviously see MicroStrategy there. ETH holdings, Sol holdings. These are continuing to grow and grow and grow. Digital asset treasury companies are all the rise. Man, tons of alpha. Really, really cool visuals packed into the State of Crypto report. We're going to come back to the State of Crypto report. Let's bring our guests into the show. We've got Santi. We've got Mike. We're going to be having a conversation about 𝘗𝘂𝘏. Okay. And we're going to be having a really fun conversation because some of these guys, both of them actually, Mike in particular, has built GEODNET into a ARR machine. These guys have millions of dollars in ARR. And we're going to talk to Mike and Geo about how they've been able to develop this business. We're also going to hear from Santi and Inversion. We're going to hear from these guys about how they've been able to create the positioning in 𝘗𝘂𝘏 as one of the premier industries and categories that we believe is going to be sustainable and survive the test of time when it comes to all of the oncoming all of the excitement that's happening around DeFi and crypto. Guys, welcome to the show. It's an absolute pleasure to have you on. Santi, it's good to see you again. And Mike, welcome to the show for the first time.
Yeah, thanks for having me.
Absolutely. I met a couple of guys from the Geo team. They mentioned that they were working with Santi. You guys were very just close collaborators in 𝘠𝘠𝘠𝗏 as two guys that are taking the physical infrastructure, building in the world of atoms, and I think that's pretty cool. So, Mike, it's first time on the show. Maybe you could give people a little bit of an intro, and then we'll kick it over to Santi. Santi's always got a lot of fun things to talk about, and I'm excited to get into it.
Yeah, super. So I'm Mike Horton, project creator of the GEODNET network. GEODNET is the decentralized location layer for robotics. We provide a signal which is about 100 times more accurate than GPS, and it is a kind of fundamental infrastructure layer for powering robots, drones, autonomous vehicles with the precise position, reliable position they need to operate and navigate the world.
Beautiful. Beautiful. We're going to get into it. Santi, welcome back, man. How's everything at Inversion?
Thank you, Robbie. Great. Excited to be here. Obviously, I've been investing 𝘠𝘠𝘠𝘠 for such a long time. It was one of the reasons why I felt that Inversion was needed. You have 𝘠𝘠𝘠𝘠. 𝘠𝘠𝘠𝘠 is probably one of the most overlooked categories, if not the most overlooked, because when I first met Mike, he came to me and said, "Listen, I'm getting all this traction in industry conferences. What do you mean?" I was like, "What do you mean? I've never seen you at a crypto conference." He's like, "No, I can't even get a speaking engagement. I'm going to ad conferences and traditional like real world conferences, and our booth is lighting up because if you're a farmer, you want to use their technology." And it was just for me an eye-opening moment where it was like, okay, like, a lot of times in crypto here, there's no real world application to this technology. And it is far from the truth. Like when you think about, you've heard me talk about helium. And I've been talking about GEODNET as well. It's obviously, I'm an investor, been an investor for a while. And it really is, Mike is one of those guys. It's super impressive. You have probably the highest caliber of founders in the space are in 𝘠𝘠𝘠𝘠 because they have so much industry expertise. And they didn't like wake up one day and say, "Gosh, I believe in decentralization." It was like, "Hey, I have dedicated my life to this industry and I see the pain points. I can utilize parts of crypto to fix those pain points that exist in industry." And Mike is just an embodiment of that.
Yeah, thanks, Sonny. That's exactly right. I mean, we came at it really first trying to figure out how to solve the problem in a Web2 way, how to put up for this precise location signal. You need a lot of base stations. We call them satellite miners. They pull down satellite signals, process the data in order to correct GPS from 10 feet to sub-inch. And people have been trying to build that infrastructure for years. And we looked at things like public storage, cell towers, and we realized this is going to be a multi-billion-dollar capital investment. Instead, we chose the 𝘠𝘠𝘠𝘠𝗏 route, seeing sort of what helium done and realizing it could be applied to our problem. We've been able to build the world's largest, best coverage, best quality network ever produced on the planet in less than 3 years, and with very modest capital raises, thanks to the community, thanks to people purchasing this hardware, setting it up, taking the care to do it right, and building such a quality product for the world through decentralization.
Yeah, very, very cool. We had a project just yesterday on, they're called Daylight, and they're also building the 𝘠𝘠𝘠𝘠𝗏 category. These guys are putting batteries and solar panels on houses as a way of decentralizing the grid. Mike, I think what you guys are doing is particularly cool because you're taking a lot of the same principles, and then you're getting hyper localized and hyper specific on a particular area. For anyone who's unfamiliar, Geode has these signals, these pieces of hardware. You can put them anywhere, put them on tractors so that farmers know exactly where the crops that need to be harvested, need to be plowed, these sorts of things. And this is the power of building this sort of network. But I'd love, maybe just generally, but Mike, you can speak to GeoNode. I think when you guys use decentralization, I'm curious, why did you choose to incorporate crypto as part of the way of building this network? And not just manufacture the hardware, stick it in a lot of places and build the network. Why was decentralization and in particular crypto such an important piece of building this network?
Yeah, a couple of things. I mean, essentially, you need a rooftop space at more than 20,000 locations around the world to build, a backbone network for the service. And trying to find and source those locations and pay for them in a Web2 way is just enormously expensive. People have been trying for 20 years and it hasn't happened. And we've done it in just a couple of years through the power of decentralization. So allowing people to permissionlessly participate in the network, set up stations on their own in exchange for token incentives is just a very powerful economic unlock that can move really fast without central coordination. So I think that's at its core. And then I think the rails are also very good. So simply trying to pay 20,000 people all over the world in a Web2 way, it's basically kind of impossible. And to do that on a daily basis, right? Our mining rewards are distributed on a daily basis in proportion to the quality of the signal that's provided and the uniqueness of the location for the signal. And to do that efficiently, it's just not really tractable with Web2 rails.
Yeah, and Mike, to add a little bit of more context there. I mean, it takes historically infrastructure is challenging. It requires so much capital, and it's this issue because you don't have the coordination that you have in crypto, right? And so you need to have centralized companies spend billions and billions of dollars. There's Mike, the competitor, so to speak, of GEODNET is a company like Trimble, which Mike, you know the stats really well. I mean, they've raised, gosh, how much?
Well, they've been at it for 20 plus years. They're a $18 billion publicly traded company. They've spent hundreds and hundreds of millions of dollars over the years building infrastructure, and they have a fraction of the coverage we do. So it's not only the capital cost, it's also the speed. And with the robots coming, be it the drones, be it humanoids, be it autonomous cars, this all stuff is converging very quickly. The need for the infrastructure is now. And the Web2 way just hasn't gotten it done, and we have.
Yeah, exactly. That's like a common theme that we see at Inversion. Huge opportunity, which is leveraging these decentralized infrastructure networks because the world requires them. Right? You talk about Daylight, another portfolio company of mine through my family office. Jason and the team just realized, the grid is incredibly fragile, and you need coordination to finance and deploy alternative battery, energy sources into the grid. And crypto just sits at that intersection because people forget at a very basic level, we're deploying infrastructure faster and it's crowdsourced and it's reliable, right? Historically, that's been the piece, right? You talk to Helium, you talk to telco experts, they're like, gosh, this is nothing new. Like a lot of people have tried to do it pre-crypto. Crypto is just that incentive layer that allows people to continuously maintain these infrastructure networks. Right? If you're a GEODNET, you have an antenna, like you have certainty that you're going to get these rewards. And then that allows the network to be actually credibly redundant, resilient, and reliable, not just for consumer applications, but like businesses starting to use that infrastructure. And it's like honestly going to transform many, many industries. I don't think people are really appreciating the opportunity here.
Indeed. And I think the reliability, I want to hit that point. I think that is, people have tried crowdsourced approaches in the past, and I push back whenever anyone tries to relate GEODNET to crowdsourcing because it's a protocol that incentivizes quality. We recently published a paper at the Institute of Navigation showing that the median reliability of a GEODNET node is 99.9%. And that is actually relative to the field that we're in. That's an incredibly great metric. And so delivering these solutions at scale, reliably, with the fundamental cost and economic advantage is just very, very powerful. I don't think people understand it at all. It's completely unappreciated in the Web3 sphere today.
Yeah, it's a category that takes a long-term mindset, a long-term event horizon when you're thinking about building in the world of hardware. And I think we've got a lot of bull market warriors, a lot of financial engineering at play, and this is what is capturing the attention, especially in a bull market. But it's impressive to see the fortitude as you continue to build, despite the market conditions broadly. And you're at very different stages, right? Mike, you have a product in production. You've rolled it out. You've got nodes that are out there. Santi, you're a little bit earlier in the process, but obviously seen a lot of companies go through the development stages. What could you say about maybe the difference between where Inversion is and where Mike and GEODNET are, or excuse me, GEODNET? Inversion will get there. GEODNET will continue to grow. Maybe you could just talk about how the adoption curve, operates more broadly.
I'll tell you why I started Inversion, because I go and talk to a lot of these deep-in teams and I say, why don't you have more scale? Like, why don't you have more usage? If the network is reliable and at scale and the coverage is there, why don't you have way more customers? And they're like, well, people, as much as the tech is there and ready, you still have the go-to-market challenge. Mike still needs to go to conferences and convince large companies to use this technology. And it's a conversation that I think you can lead with business logic. And you would think that businesses would be smart to adopt a network like GEODNET because it lowers their costs and it improves their operations. But we know the story. This saga of companies being slow to adopt technology is real, and it's not going to change. Boards are slow to adopt this technology. Crypto still has stigma. The minute Mike walks into that room and he talks about decentralization, game over, right? The minute they maybe look at the docs, it's like, oh, it's crypto. No, that's not viable. Even though you have a 180 on the regulatory environment, Inversion quite literally exists to be a deployer for this technology because I don't want to wait another 10 years. The technology that Mike has built and Jason has built and Amir and Helium team is built is ready to be deployed at massive scale. It's battle tested. And so we come in and we'll work hand in hand with a network like GEODNET and Helium and Daylight and accelerate that deployment because we don't want to ask for permission and sell into businesses. I want to buy the entire business and then call Mike and say, hey, come in here, do that. Why? Because I win. I mean, quite literally, you lower cost, you dramatically improve the operations of that business. And so no one in the industry has woken up to that. No one in private equity is really understanding how this technology is going to massively transform these businesses. Everyone's focused on AI. Look, AI is great, but Inversion takes because I've invested in this technology for so long, no one needs to come and convince me that I'm quite literally an investor in most of the best projects in crypto. I just want to deploy them at scale because I want to see them win. It's such a shame that the best goddamn thing that this industry is selling is a 50 times perpetual long product.
Amen.
It's like, enough's enough, man. Let's cut the crap.
Yeah, we've seen it firsthand on this show. We try to filter that signal through the noise, and we really appreciate you guys who are really building for the long haul coming on. Mike, you mentioned something that really piqued my interest because I've seen kind of these guys sort of orbit around it, but I think we're still just not hitting it on the nose. And I think you were getting to it, which is the difference between decentralization and crowdsourcing. Why is crowdsourcing so ineffective to build a network, but decentralization can really scale?
Yeah, well, I think the challenge with crowdsourcing is that you get kind of spikes of activity. People get excited about something. OpenStreetMaps is a good example. People get excited about it. There's a lot of contributions. There's been a lot of contributions of unique data products like hiking trails there, but the sustainability to build reliable infrastructure isn't there. And when you deploy infrastructure for real applications, you have safety considerations, you have just a need for very, very high uptime resiliency. We all learned that again with the AWS outage just yesterday. You need to build a reliable infrastructure to deliver things like robotics, transportation, products that, drone delivery. These things can't be, working one day and not the next. And that's been the classic problem with crowdsourcing. It's been kind of sporadic. When you put a protocol around it, you're creating a long-term mathematical structure that people can understand, model, and plan on in order to deploy infrastructure. And the infrastructure actually becomes more reliable than the centralized variation of it. There is actually a ton of internet infrastructure issues in general that people don't see. It's not that reliable. Decentralization at its core really addresses these problems. And you need a token to do that. There's no way to I testified to this to the House Ag Committee working on the Clarity Act. You need a token in order to make these networks work. It is a utility token that connects the supply and demand together. And that is the magic. The infrastructure that's been built by Solana and the L1s is all there for you to use. And it binds all this together and makes it work.
Yeah, I'm glad you brought up the Clarity Act because there's crypto founders and there's lawmakers that are in DC today that are discussing this. David Sachs is supposed to have a conversation with some of the senators that are holding this up. What would the Clarity Act do for your business in particular to help push things along?
Well, in the DeepIn case, the SEC has already kind of come out with pretty clear guidance that these things don't violate the Howey test. So that's a huge step forward. We're not, DeepIn founders are not waking up in the middle of the night worried about the Howey test anymore. So that's a huge step forward. I think the Clarity Act will just help really the United States lead in financial innovation. And I think that's foundational to bring infrastructure, jobs, productivity, reshoring a lot of core tech that's been offshored. I think the Clarity Act is a huge accelerant to that. So I think it'll help the economy tremendously.
Yeah. Santi, any additional thoughts there on the clarity?
No, I think it's instrumental. I mean, the U.S. really sets a tone for the rest of the world, and we've been waiting for this for many, many years. And it's a detonator. I could tell you, from our standpoint, when we go talk to businesses, like there's no hiding of our value creation story. We say, hey, we're going to plug in this technology called blockchain, crypto, whatever you want to call it. And I can tell you, long gone are the days where management teams would be like, no, can't touch that. Even investment banks that have historically been so against this space, not only are okay with it, but they welcome it. It's like, you know what, our clients actually do want to hear about it. And so I've obviously been intentionally building in the open. You can't tell how many business owners reach out directly and say, hey, heard Inversion is looking to, buy businesses or work with management teams to integrate this technology. We'd love to learn more. I mean, we don't have enough capacity to take in all the inbound that we have. We are very focused on a couple of acquisitions, but that's what a regulatory 180 will do to you.
Yeah, absolutely. I think there's also some stats out of the A16Z State of Crypto report that just came out a few hours ago. Estimates that the number of monthly active crypto users has grown 40 to 70 million. And now we've got over 700 million global crypto owners, not necessarily on chain, but holding crypto, and 181 million monthly active addresses. 40 to 70 million of those are people active on chain, transacting, bridging, doing all of these things. I think this is helping to spur the Overton window that is available to us as we continue to talk about crypto and blockchain and incorporate it into businesses. A lot of this is a community-led effort that is bottom up, and it ends up at the tops of these companies and the decision makers in industry. Any comments there on the growth of the industry and how this is changing the perception of our industry and how it's making it easier to build and scale businesses?
I will say, I read that report last year. I think they put it out, and it's the number of active users hasn't changed much. And I want to draw attention to that because that is the issue that we have. Look, as much as we have built really great technology, crypto is still not a relatable piece of technology for many people. And 40 million active users for a $1 trillion industry is actually very little. And that's a problem that we have to address. We are still mostly a casino, and it's a disservice because we're selling ourselves short as an industry. It's frustrating for folks like Mike, that it's still an issue, right? And so that's why I created Inversion. That's the challenge that we have. When you go talk to a regulator, they still say, look, I hear you, really interesting tech, seems like hobbyist technology. Most of those 40 million users are going 50x or levered on Hyperliquid and got all wiped last, 2 Fridays ago. And that's really the challenge that we have, right? We need to go to a state where we have 1 billion plus users interacting with this technology. And I tell you, it's not going to be through the casino. It can't. It just fundamentally won't. And so we got to quite literally invert the go-to-market. Like, we are not going to onboard 1 billion users through an exchange, Robbie. It's just unrealistic.
I think there's pure math that we can point to as to why that's not going to happen. And it's because in the world of 50x perpetuals, every long has to have a short and vice versa. And if you have 1 billion people, 50% of them are going to get wiped out every other Friday. And you can't build a sustainable user.
Totally not. Look, I'll tell you one thing. This is how early we are as an industry. We are debating whether this technology is useful based on the price of a crypto asset. The tech world, okay. If they're a company, you're making a decision of which server to use, AWS or Azure, or NVIDIA or some other company. You don't make that decision because the price of NVIDIA has gone up or down, or the price of Amazon has gone up or down, or the price of Microsoft is up or down. You use Microsoft Suite and you use Azure or AWS because it works. And that's just like how it's a problem that we need to fix as an industry. It's nonsensical to be debating the merits of this technology based on the price of the crypto asset.
That's an amazing analogy. That is right, spot on.
Yeah, I think it absolutely is. We have difficulty separating the financial elements of this from the hard technology elements of this. And I think this is why these market cycles come and go. We get this fervor in the industry when everyone starts to focus on prices, and then it ends up shifting back. And I think this category in DePIN is particularly positioned to succeed no matter market conditions, no matter market cycles. Mike, one of the conversations I had when I met one of the founders of your team was that you guys have had real revenue. Like you've got a live product. You guys have, I think it was 3 or 4 million in ARR.
6 million.
6 million. Hey, I think I met these guys 2 months ago. Now you guys are at 6 million. So there's tremendous growth that's happening here. Maybe you could just talk about, what this is like when you're looking at real businesses outside of crypto, because in crypto, we have this thing called the revenue meta. There's this thing that's like this unicorn status if you're generating any kind of money at all, but it's actually really, really common and quite useful when it comes to real business. So maybe you could just talk about your journey as you guys have grown. Now, what are some of the things and the strategies that you've used that have proven successful?
Yeah, I mean, we let the product speak for itself. We give customers free trials all the time, and those convert at a very, very high rate to subscriptions and to enterprise customers. We do have the best coverage, the best quality, and the best price by kind of an order of magnitude in our product category. So it has been easy to attract users to use and build on our platform. And we're addressing markets that, while they're big incumbents like Trimble, there's also a lot of white space market like robotics that just, is brand new and is wide open to the competition and wide open to new solutions. So it's been actually, we're growing at 200+% year over year. And that's going to sustain. So I think it's just early. Web 2, 1 year, and Web 3 is about 100 years in Web 2. So people do need to take this a little bit longer view. And that's been hard for the market. I am still, you'd have to argue really hard with me that crypto cares anything about fundamentals right now, because I don't see much of any evidence of that on a day-to-day basis. As in DePIN, a lot of these projects that are the high quality projects have proven a great deal of traction, yet valuations are down from a year ago. So I don't know. We're in it for the long game. I don't think about that stuff that much. We have so much going on in Web 2. We're doing all kinds of stuff in drones. We're working on new silicon architectures to make these robots much cheaper, bring a lot of the capability of manufacturing this technology, which is today almost exclusively in China, which is fine, but the US should be competitive. And we're working really hard on that. That keeps my mind busy and occupied, but I just kind of am bedazzled at times by the Web3 market because it's very confusing to me, honestly.
I think there is a reshuffling that will take place, and it's difficult to say exactly when this will take place. But again, over the long haul, if you take a longer time horizon, this, the state of just bloat and overhyped meme, it's just unsustainable at a certain point. And people can come into crypto for gambling and for the casino, but ultimately, we know how that's going to play out. You guys have a token that's live. You guys have real revenue. Like there are things that people can buy if they don't want to just go 50x long on some perps meme coin. Like there are things that they can hold for the long haul.
Indeed.
Beautiful. Santi, I want to switch gears a little bit and get your reaction to a couple things, just more recent timely things. Arthur Hayes recently put together this crypto PE. He wants to do some private equity acquisitions. Inversion Capital is in a similar playing field. There's some important nuances here, but I'm curious just to get your reaction to Arthur's latest venture and how you think Inversion and Maelstrom could complement one another or kind of figure out what the landscape is going to look like in crypto PE.
Yeah, look, we're very focused on buying traditional, deeply unsexy Web 2 businesses and integrate this technology and make them more efficient. That's unique to our strategy, pioneers in that field. It comes from having invested for so many years in the space and in companies like GEODNET and Daylight and Helium. Maelstrom, their private equity fund is focused on acquiring crypto companies, maybe companies that, could, so it's private equity. Both strategies are, they're just within crypto. We are not as interested in that. Look, the reality is private equity is a very proven asset class. It's been around since the 80s. I used to work for one of the guys that kind of really invented it and was doing some of the larger buyouts. When I was at JP Morgan, I was saw some larger buyouts, like when Dell got taken private, when 3G and Warren Buffett bought Heinz. So it's a strategy that exists. There's tens of thousands of private equity funds. Most of them use financial engineering, this idea of putting so much leverage and debt on a business, and then kind of the same way that you would like buy houses. And the reality is that strategy doesn't work, right? Especially not in a world where high rates. And so look, it's validation. The asset class is maturing. There's only a few private equity funds that have created meaningful value. Most of those have adopted technology to drive value in the companies that they acquire. So there's definitely parallels. I think what Arthur and their team probably sees is that opportunity, but just applying it within crypto, right? I've ran into them with a couple of companies that I've looked at that I found interesting in the crypto space, and just saying, hey, you probably do something pretty transformational here. So look, there's KKR, there's Blackstone, and then there's 10,000 other private equity funds. And so there's I think it's a reflection of the maturation of this asset class. I think there will be our position is that every business is going to adopt this technology to remain competitive. And so we take a multi-decade view to that, and the opportunity is vast. It doesn't apply to one single industry. It doesn't apply just to robotics. It doesn't just apply to agriculture. It quite literally applies to every industry. And so that's really the opportunity set is massive. Yeah. The parallel draws, in the early 2000s, no one really understood what the internet was going to be useful for. And then you had private equity funds like Vista, Silver Lake that were smart in understanding that software is going to transform how you do business. And they've been very successful in doing that. And then there's other private equity funds that kind of didn't really understand new technology and fell behind.
Yeah. And with private equity, we can kind of kill multiple birds with one stone and really insert this technology into several companies. And I think it's important to build kind of, someone that you're looking at and you're stewarding forward in this space, which is Avalanche. They've recently done some financial engineering themselves with this AVAX DAT. That's going to go forward. Curious to get your reaction to this and how you think it could help push forward some of these other things that you're mentioning, whether it's private equity. This is the technology you're going to insert when it comes to inversion. How do you think Avalanche fits into this broader picture?
I see an opportunity to work with Avalanche because it affords out-of-the-box experience to launch our own layer one to support all the acquisitions and companies that we acquire. The comment around DATs is it increases the opportunity, the availability of investors to have exposure to crypto assets. It does nothing to prove this technology is anything more than a speculative asset class. So you're just expanding the availability in a different financial market, which look has its own merits, but it doesn't again solve the problem, the biggest problem that we have as an industry, which is it's not relatable. You want to think about utility tokens, the thing that utility drives the value of an underlying asset. The reality is that most of the fees of these networks is tied to speculative activity. And so putting it on a wrapper as a DAT does incremental value and giving people the ability to buy, in the absence of having an ETF. It's a vehicle to express a view, but it doesn't make crypto relatable. It doesn't prove how Avalanche or this technology can serve business needs. And if we don't do that as an industry in the next 3 years, I think we're going to have a hard trouble justifying valuations across the board. And the tech is real, though. Like, it works. You can get scale. The question is, again, it doesn't do anything for that. And so a DAT, you're going to find DATs be super reflexive, and they're going to go down like your typical altcoin goes down. And you're starting to see that with most DATs across the board, right?
Yeah, but just to follow up on Avalanche, you guys, you're real pioneers and stewards of this technology, and I think that's something that you're particularly focused on, is separating the financial elements of this from the technology of this, and we can focus on this is kind of where the separation between blockchain and crypto comes in, because crypto gets tied up in all this financial engineering, whereas blockchain is the underlying technology that can power fundamental changes in a landscape, like physical infrastructure, like networks. And so this is where it's important to separate these things.
Totally. Yeah. I mean, I'll say it again, right? I mean, we're going to reach, if we do this right at Inversion, we're leading with business logic. We know that this technology can cut costs, can transform unit economics, can really meaningfully improve business operations. Price eventually catches up to that. The market is a voting machine in the near term, is a weighing machine in the long term. If we do this well, the Inversion chain and our utility token and networks that you utilize in our ecosystem, maybe GEODNET, maybe Helium, maybe Daylight, maybe Hive Mapper and other projects will benefit, because we're very motivated to onboard a user that has never existed in crypto before. It's a user that doesn't understand how this technology works, but is very motivated to use it because they feel the impact. And so, I think going back to the A16Z report, we have very little active users today. We have less active users than ChatGPT. Okay. And so we cannot justify the existence of this industry if it's just going to be a casino. And if it is going to be a casino, then it's contained of a small sphere. So I want to onboard 1 billion users on chain without them realizing that they're interacting with this technology. Like, infrastructure is going to be invisible. It always has been. That's the end state of the technology.
Yeah, indeed.
And so obviously, if we onboard 1 billion users, maybe you can start justifying the valuation of some of these networks. But is Ethereum worth 500 billion? Gosh, I think you got to sit there and really have a pretty cooked up version and assumptions on terminal value to derive that sort of valuation. Is Solana worth 100 billion? Gosh, well, we got to think that maybe the fee stream maybe diversifies away from pure meme coin activity. Yeah. And so I think, like, speculation, the casino is financial markets, financialization is a massive, massive industry. I'm not like trying to just take a ding on that. But I think we all know how reflexive that is.
Yeah, certainly.
Right.
And this is where things tend to average out in the long run. And you guys, with the long time horizon and the sustainability, we'll see, who survives and what survives. As we close out here, just in the last couple of minutes that we have, curious to just find out what's next. Mike, like you mentioned, 6 million in ARR. You guys are doing incredibly well. What comes next? How do we push 6 to 60 ultimately, and then to 6 billion? Santi raises his hand, so maybe Santi can pick up on that as well. I'm just curious on both ends, Inversion and GEODNET, what comes next?
Well, from our side, we're big believers in consumer autonomy, for lack of a better word. That is, these drones, robots, consumer services like self-driving cars that really bring physical AI to the consumer. We think that these unlock the largest markets ever, and that DeepIn provides foundational infrastructure for that. Some of the data collection protocols, like a project we have with Rover that's collecting data for HD maps and for world model training, really foundational ways to use Web3 very efficiently to build out physical AI. And I don't think some of these visions of physical AI really happen without Web3. So I think that's another unique thing about that market being white space, and also having these geophysical problems that are hard to solve. Decentralization is just a really great way to orchestrate that. And I think it's already proving to be quite successful. And in time, as the weighing machine will eventually weigh these things out, and I think they're going to be very valuable.
Love it. And Santi, any insights? Can you give us any alpha as to what's coming next for Inversion?
Yeah, well, look, we're actively hunting. We have identified a couple of really good businesses, and we're actively, the reception for management teams is really strong. The pipeline is strong. I think you'll see us acquire a company, and it's going to be a case study for crypto of how it could be, meaningfully impactful to business operations. And I think it will help Mike when he goes to conferences, when he goes to pitch his technology. And, that's why I started Inversion, because I love this industry. I think if I do this well, it will facilitate the go-to-market and the selling for many of these protocols that, may or may not require us to acquire business and integrate them. But, I think it's an incredible time in the industry. It's 4 years ago, the technology wasn't ready.
Mm-hmm.
Now we have high throughput blockchains. We have even an event like 2 Fridays ago, you see a path where, look, there's a lot of wreckage, but the infrastructure on chain works flawlessly. And so we got to just, bring a different type of user and different type of use case. The logic works. The smart contracting works, the infrastructure works, the coordination works. And so I think there's really we don't have, the last thing I'll say, we will not have anyone to blame in 3 years if we can't increase the active user base of crypto 10x. No one, not the regulator, not the infrastructure, anything but ourselves. And so we got to get our shit together. And so at Inversion, we're very, very motivated to fix that, not just for ourselves, but for the sake of this industry, because the time is now, not in 10 years.
Super well said.
Love it. Awesome. Guys, thanks so much. Santi, I think I said it last time too. If I was the second largest telecom company in Latin America, I'd be shaking in my boots right now. Inversion's coming for you.
We're not barbarians, I think, but who knows?
I love it. Guys, thank you so much for joining. It was a great mashup episode. Santi, pleasure as always. Mike, great meeting you and great having you on. Yeah, we'll love to pick this up sometime when we scale deep in another 10x from here. Next week, a couple of weeks from now.
Let's do that.
Awesome. Cheers, guys.
Good to see you, Mike.
We'll see you next time.
Thanks,
Good to see
Robbie.
you, Sanio. Cheers.
Bye.
Love it. Beautiful. Guys, DePIN. I mean, if you're looking for something that is just is going to survive, then DePIN is your answer. It's really, really cool to see, because if you're like me and you're kind of looking at this industry and maybe you got in a while ago, but you're just a little bit disillusioned by the things that are getting a lot of attention and getting enormously high market caps these days, there's gems out there. There's teams that are building in robotics. They're building DePIN. They're building these networks. They're building in the world of hardware. And ultimately, they're building 4, 5, 10, 50 years from now. And these are some of the networks that survive the test of time. So very, very exciting. Great conversation with Santi and Mike. We've got Kosh coming up next. I think we're going to get a little bit of a standby before we bring the COO, Kosh, up. And then we're going to get into our next conversation with Kosh around Jupiter and stablecoins, which is going to be particularly exciting. So let's go to standby real quick, and we'll be right back with our 6th episode of Stabled Up. All right. We're live. Cash, welcome to the show. Yeah, man. Really, really cool to have you on. We've been keeping track of the Solana ecosystem for a long time. I mean, just generally, we're technology maxis. Like we're not ETH or Solana maxis. We like to take a broad stroke view of the ecosystem. And at Jupiter, you guys have done incredible things and grown incredibly quickly. It's your first time on the show. So before we jump into everything that's happening recently and the new stablecoin launch partnership with Athena, could you just just give us an intro first to you? You know, how did you end up building in this wild industry that we
it was a long and circuitous route. So I first got Bitcoin back in the free faucet days. I don't know if you remember that, back in whatever that would have been, like 2009 or something like that. You could just go to websites and click and get like full Bitcoin for free. Obviously, I lost all of that Bitcoin very quickly, but was intrigued. And it wasn't really until 2016 that I got like nerd sniped by the space. My background is in postmodern political philosophy, is like what I studied in college. And I read the Ethereum white paper. And in the first paragraph, it talks about DAOs and this idea of these autonomous organizations that, can reshape the fabric of society, perhaps. And I was immediately taken, got some ETH, got into the DAO, like the very first one. And as your viewers know, exactly. So it got hacked. I was like, I don't know what the hell this is. But then I got Ethereum Classic, because there was the fork, right? And I was like, this is the greatest industry ever to exist. I just get free money out of thin air. Anyway, to make a long story short, over the next 5 years, I was like following the space pretty closely, but didn't really get all the way in until 2021, when a good buddy of mine, 𝘱𝘭𝘵𝘬𝘭𝘵, who people might know as the CMO over at the Solana Foundation, he was a poker buddy of mine. I was going to get a job at a bank. He kind of grabbed me by the shoulders and said, what the hell are you doing? Let's go do something crypto. And that's when Super Team got going. So ran Super Team, or worked on Super Team, part of the founding team, for 4 or 5 years. I was the Sherpa over there, basically helping onboard entrepreneurs and builders to Solana. And so I just did that as a nonprofit exercise for many years until the beginning of this year, when I joined Jupiter full-time as the cat herder. That's my official title, I should say. COO is only what I use because it fits on a little banner, but cat herder is my more precise title.
Wow. Okay. We might have to update. I think we just updated that in our banner, cat herder at Jupiter.
Okay, nice.
It's official. Another promotion. We're 2 promotions in.
That's pretty good. I should come on more often. This is good. I like this. Yeah. Actually, the funny thing is I was only the cat herder because we don't really do titles at Jupiter. But then we signed an MOU with the Kazakhstan Central Stock Exchange and to like tokenize equities in Kazakhstan. And they were translating my little quote into Russian. And they were like, what do we do with this? What is a cat herder? That's not a concept in the Russian language. So like, just call me COO and that's fine. So we've been running with that for press ever since.
And it's stuck. There you go.
Yeah.
Man, you guys have been doing great things. A couple of announcements just went live. You guys are doing prediction markets with 𝘗𝘓. You've got a stablecoin partnership with Athena. So all kinds of cool stuff. Can you just kind of give us a speed run of when you joined Jupiter and catch us up to where you guys are at today? Solana had a very nascent ecosystem just a few years ago, and now it's exploded. Just give us like the highlights. Where have you seen the most adoption and the most activity over the last 12 to 18 months?
Yeah, the last 18 months in particular have been crazy. So to the degree that like the broad world knows about Jupiter, oftentimes they used to know us as just a DEX aggregator, the top DEX aggregator on Solana, and the best place we would route across all liquidity pools that existed on chain, and give users the best execution price every single time. That was kind of the motto. And we became very dominant in that vertical. And then it became clear that, hey, we have a bunch of user trust. We have an absolutely cracked technical team. We should start to expand and create more value per user. And that's really when we embarked on this DeFi super app journey that we've been doing over the last 18 months. So we went from one product 18 months ago. Now we have a dozen revenue generating products, which is pretty crazy. A few kind of like small highlights. First, we are Perps DEX. Launched that, I think, just about 18 months ago, actually, maybe a little bit less. And it's been since it was launched, it's been number 1 by volume, certainly number 1 by fee paying volume. And that kind of continues to today on Solana. A lot of people use it. We only have 3 assets on there, Solana, Bitcoin, and ETH. but it's guaranteed liquidity at basically up to, I think, 20 million max size per trade. So people really dig that. And I should say that JLP, which is the liquidity provider token for perps, is like $2.1 billion asset. And that's been really great to see people. It's the best token on Solana in many ways. That's one highlight. More recently, we launched Jupiter Mobile, which is our mobile wallet and our desktop extension. Past 1 million downloads on that. People absolutely love it. The only app that shows you your trades with P&L, with your watch list, with your portfolio across all of DeFi in one consolidated view. And then if I had to pick one last one, I would say Jupiter Lend, which we just launched in Q3, ran that up to $1 billion in supply in 8 days, fastest growing Solana protocol in history. And we did that in conjunction with the Fluid guys, who are awesome as well. And that kind of set the tone for like how we wanted to continue to grow. We realized that we have a lot of distribution. We have a lot of like user trust, and we have, you know, many 8.4 million wallets connected to Jupiter just in Q3 alone, right? And so we have a lot of users, and that is really attractive to other partners that want to enter Solana, like Fluid, or like Athena, who is the more recent partnership that we announced. And we think that's going to continue on. Same thing with 𝘗𝘕, with the prediction markets that we just launched 2 days ago. They want to work with, you know, the people that have the user trust and that have that distribution, and that's Jupiter.
Yeah, I want to dig particularly into the Athena partnership and what you guys are doing with JupUSD. But you mentioned the user number. Did you say 8.3 million? Is that, did I get that right?
You did not. 8.4 million. 8.4 million. Yeah. Let's not be bearish now, you know.
That's 8.3 is FUD. 8.4. That's what we're at. Because we were just talking about the State of Crypto report that came out of A16Z. They estimate that there's 40 to 70 million monthly active users on chain. This is kind of like the most active subset of users. They're bridging, they're using the apps, they're actively self-custodying, and they're using these things actively. Monthly active users. And then, you know, we've got 181 million monthly active addresses. These are a number of distinct active addresses across blockchains. And then we've got 716 million global crypto owners. These guys might be on centralized exchange, might own crypto in a centralized account, not self-custody, not bridging. But 8.4 million out of the 40 to 70 million that are on chain is, I mean, it's incredible market share that to have, you know, upwards of just, you know, whether it's 15, 20% or so, 10, 15% of the global population that is using these things on chain. And so I think that speaks to Solana's distribution. It speaks to Jupiter's distribution. And it means that now, like you're doing, you guys have the opportunity to launch these verticalized products, these adjacent product offerings that are all complementary. And we see a lot of teams go after this super app concept. Few of them are going to survive. Few of them are going to capitalize on the opportunity. They need the distribution that you guys have. So I think this speaks to the opportunity here, and also what you guys have at your fingertips. Was there an inflection point before we get into the stablecoin conversation that you guys saw, hey, we've reached an inflection point, we reached a critical mass of users that are familiar with Jupiter, they're on Jupiter, now is when we can embark on this broader user journey? Did that happen, or was it just kind of more gradual, an evolution, one product launch after the other?
Yeah, you know, it really was a slow and hard grind, right? Especially in the wake of FTX, which, you know, everyone remembers is quite a painful experience for anyone who was on Solana. That was pretty brutal, right? So it goes down to $8, proclaimed dead by basically every project that's out there. And at the time, a lot of projects ended up leaving, right? They're like, well, there's no future on Solana. And so we'll go somewhere else. But Jupiter never did, stayed on. And then from there, just like as things steadily got better, you know, Jupiter kind of grew along with it. There was no in particular point where things went up. But just to put some numbers to it, like we're seeing ridiculous growth every quarter. So like versus last quarter, our volumes are up 70%. It's like somewhere in the neighborhood of $240 billion in volume just in Q3 alone, right? You know, our TVL grew by 42% in Q3 relative to Q2. So I guess it feels kind of gradual because it's just like this constant growth curve that's just up and to the right. And yeah, we're lucky to have it. I think that Perps was the first big bet. Seeing that Perps could work, that we can kind of expand the product offering and retain those users and kind of convert them and upsell them, cross-sell them, et cetera. That was the first indication that, hey, this can really work. And that's when I think we went all in and started doing all the different products that exist.
Yeah, incredible. Okay, let's dig into one of these products, which is the JupUSD stablecoin in partnership with Athena Labs. I'm going to read off just a couple of things here that stick out. This new token will serve as the core liquidity and collateral asset across the entire Jupiter ecosystem, including perpetual futures, lending, and spot trading platforms. Maybe you can just speak to, the scale, but also the effect of unifying liquidity in your own stablecoin. Maybe just can you describe what it means to unify liquidity in a stablecoin and what that means for the platform overall? And then for it to be a stablecoin of your own choosing, right? It's not a stablecoin you guys are importing from somewhere else, or no, you're the issuers in collaboration with Athena. What does it mean to do this in general for the platform? And then what does this mean for it to be your stablecoin?
I think it means a whole hell of a lot at a few different levels, right? So I'm fond of saying that crypto has product market fit across 3 categories, and that's payments, profits, and Ponzi's. And obviously Jupiter does not really get involved in the Ponzi side of things. And we're pretty well established in the profit side, right? Around trading, yield generation, et cetera. It was really payments that was the big missing piece for us. And so for us, it kind of fills in this kind of critical hole that we had in this DeFi super app vision. The goal of Jupiter right now is anything that you want to do on chain, you should be able to say, just use Jupiter, to a friend. I want to send money around the world, just use Jupiter. That's the kind of goal that we're going after. And payments are obviously a giant business, right? $300 billion plus of stablecoins globally. I think pretty much everyone knows that number is going to at least $1 trillion, including the Treasury Department put out a report in that same direction. And so I think we're really still in the early stages of stablecoin adoption. And for Jupiter to have its own branded stablecoin is a great way for us to build up even more trust, to capitalize on the existing trust that we have and build up more trust here. And then also kind of control and internalize some of the revenue and the growth within the products. Just like for a little bit of context, inside of JLP, well, to zoom out for a second, our perps product is not an order book based perps. It's an AMM based perps, a little bit like GMX if your audience is more familiar with like the EVM landscape. And the JLP token, like I said, is $2.1 billion or so in AUM, and something like $750 million of that is in stable coins. And that's all in USDC right now. And no shade to USDC, obviously a great company, have done incredible things, doing a lot of great stuff on the regulatory side. So nothing against them, but if we can internalize that ourselves and then potentially figure out ways to kind of distribute that yield to JLP holders, to Jupe stakers, to other users of the products, I think that's a really powerful value prop for us. And it allows us to kind of have full control end to end of the spectrum, right? Apple famously was really big on this. And we don't want anyone to open up the computers to touch the motherboard. Obviously, in DeFi, it doesn't work that same way, right? You're open and composable by default. But that doesn't mean that there aren't opportunities to kind of control the brand experience and the product experience at every level of the stack. So we're very optimistic about how fast we'll be able to grow. Again, we have a very large number of stablecoins directly in our protocols already that we can start to convert out into our own stablecoin. And I think that gives us a real leg up in addition to the distribution that we have and the trust that we have and so on.
Very cool. This is an approach that it's not just you guys, right? This is an approach that perpetuals exchanges are taking overall, where they're seeing that they have the majority of their collateral in one particular stable asset, be it USDC, and then they're innovating on that, and they're going and they're launching their own stable coins. On one hand, we're internalizing this into our own engine, but on the other hand, we're deploying more and more stable coins left and right. There's a new stable coin launching every day.
Right. Yeah.
What do you think is going to be the result of this Cambrian explosion of stable coins? Is it an opportunity for middleware and infrastructure to come in and kind of unify this once again? We don't want to reach kind of the same fragmentation that we have in Ethereum world, across all the L2s and, wrapped, staked, ETH, this version, that version. Like, how can we bring this all together so that, we have one uniform liquidity layer, we have uniformity across our industry, and we're not confusing newcomers into the space?
Yeah, I mean, I think it's a great point. And I think this balkanization of liquidity, as my buddy Ramsey at the Solana Foundation would say, can be a real problem, right? And I think the real short-term effect is that most of these stablecoins are not going to last very long, right? In the same way that everyone's launching a meme coin launchpad, 3 to 6 months ago, and basically, a handful of them still kind of remain standing. I think stablecoins will have the same opportunity where many people see the attractiveness of the business model and the the power of the narrative, and they want to get on top of that, right? But the truth is, when you have a lot of divergence, you inevitably have to have some convergence back afterwards. And I do think that that's going to happen on the stablecoin side. From kind of an industry level, the two things that are really incumbent upon us are, one, more experiments in terms of unifying that liquidity. There's stuff like this on Solana right now and in other places where you're kind of collecting a bunch of different stablecoins under the hood and then kind of treating them as equal. I am not as bullish on that approach, honestly, because I think different stablecoins have different risk assumptions, and it's not always fair to say that they should be one-to-one. So I think the more likely path is that there's pressure put on the industry to build really high-quality stable swaps that have exceptionally low slippage, right? The problem is not too many stablecoins. It's too much slippage as you're trying to move between them. Because then if I'm going from $1,000 of, let's say GPUSD to $1,000 of USDC, I want $1,000 of USDC back, right? I don't want to get $996 back. And that can really break the experience. And I think there's great, demonstrations in this direction already. A major credit to our friends over at Fluid, who, like I said, are helping build Jupiter Lend. On Fluid right now on Ethereum, there are times where it's less than 1 BIP, oftentimes 10 pips is the only kind of fee or slippage that you pay between major stablecoins. That requires deep liquidity across the different stablecoins. And what JupUSD is going to have is, at least $750 million of liquidity just from the JLP pool alone, right? So we feel very confident that we'll have deep enough liquidity to have exceptionally low slippage between stablecoin transfers. And that's going to allow us to kind of persevere over the long run.
It feels like we're reaching a tipping point where DeFi is becoming more capital efficient than Wall Street. And once we reach that point, that's when I think it becomes more of a risk to Wall Street institutions to not be on chain, right? Like if they can get a fraction of a BIP, like you're saying, if they can get pips on chain by going back and forth in between assets, whether that's it could be tokenized stocks at a certain point, right? And ultimately this could be what they're trading, and they're going back and forth between whether it be stable coins, tokenized stocks, all these different asset classes that ultimately will be on chain and available. It becomes greater, it becomes better price discovery, better liquidity, better prices, and more cost effective for them to execute their trading experience on chain rather than continue to do so off chain, even though where they're being forced to innovate. Have you had any conversations with Wall Street institutions or any of these asset managers and trading firms that are kind of are they seeing it this way, or generally what's the vibe and sentiment that you're hearing from these guys?
So yes, across all three. I mean, again, because of Jupiter's kind of position in the ecosystem, we're oftentimes the first port of call for those kind of partners. And what I've noticed over the last 2 years or so is that crypto as a technology cannot really be sold, right? It really has to be bought. Like, for me to go to you and try to explain and kind of force it down your throat is very hard. And God bless the people that are doing that work in Washington, D.C. and elsewhere. But I do think that we're going to actually see a lot of adoption is going to be when people see the users, they see the product benefits, and they see the volumes really starting to happen there. I do think that FX in general has long been the kind of white whale of the industry. And again, there's really cool things happening there. Shout out to Altitude and the Squads family, who've got a really great business offering for euros to USDC and stuff. And I think you're just going to see more and more of that, where they do have to kind of cannibalize their own revenues when they come on chain, right? So that you're asking them to give up something, and the thing they have to get in return has to be big enough to justify that trade-off, at least on the Wall Street side. Certainly on the capital allocator side, there's no doubt that they're all coming on chain. Many of them are talking to us and other major protocols. I don't think that they're quite that far on the risk curve just yet. And here I'm talking about the multi-billion-dollar funds, right? Not the $10 to $100 million liquid funds in crypto. I think that we still have a little bit of a while to go, but for the first time, they're the ones knocking on the door. They're the ones asking for questions. I mean, one of the biggest banks in the world showed up in my email like a week ago, be like, "Hey, we'd love to urgently talk about some new product ideas."
Just cold outreach?
They got a little intro from somebody else, but yeah, I didn't know that it was coming. It just showed up in my inbox like, "Hey, connected you to," I won't say who it was, but every one of your viewers has heard of this entity, right? And so we're starting to see a lot more of that appetite come in, but it is incumbent on the technology continuing to get better, right? It's I think everyone in the TradFi world knows that crypto is still not ready for prime time, literally right now, but now everyone can see the path to get there in the next 12, 24, 36 kind of months.
Yeah, beautiful. Man, it's exciting. I'm dying to know what this page is. Best of luck in that BD journey.
Thank you. Yeah, yeah. No paperwork signed or anything, so please don't, buy Jupe on the back of that just yet. But
That's how it starts, man. That's how it starts. Very, very cool. Okay, I'd love to dig into a little bit more of the nuance in Jupe USD.
sure.
You got Athena as sort of this collaboration partner, and we've seen this. We've seen them do this with some of their other partners. But could you just walk through what the journey is to ultimately spin up your own stable coin? What is the role that Athena plays? What is the role that Jupiter plays? And how do you collectively bring Jupe USD to life?
Yeah, I'll tell you, it's a bit of a funny story because we were at least a month and a half, maybe 2 months into building it out ourselves, fully by ourselves, right? In order to do so, you need different entities that have these open-ended fund licenses. You have to get these regulatory approvals. Like, it's a pretty complicated legal and regulatory matter, even outside of the tech side of things, right? And that just takes a lot of time to get the necessary licenses and so on. And we had been working with a number of great partners, including 𝘗𝘯𝘵𝗦𝘬 and BlackRock, who are the ones who make the 𝘠𝘪𝘵 token, which also backs USDB from Athena. And it wasn't until we saw the hyperliquid USDH proposal process that it really occurred to us of like, hey, maybe we should partner with the best. We just did this with Fluid, the best guys in lending. Worked out very well. Maybe we can try it, doing it again. So I reached out to Guy, and we had a few calls, and honestly, within less than 2 weeks, we met up in Korea and some other places, and within 2 weeks, the deal was signed and we were ready to go. In terms of the actual kind of rollout, it is a little bit different for us than it is for some of their other partners. Athena's contracts are not natively on Solana today, which means you cannot mint and redeem, and that can create risk or make certain people uncomfortable and kind of reduces the way that you think about a particular stablecoin. So on Solana, Jupiter is going to be building the contracts in collaboration with Athena, of course, but we know Solana, so we're going to be building the contracts. Athena is going to be managing all the operations around it. They're also going to be great design partners to let us know what works, what doesn't. They're working, helping us work with Anchorage and many other great partners to ensure integration across major custodians so people have access to it. And there'll be, also great kind of partners on the collateral side. To start, Jupe USD will be fully backed by USTDB, which is basically a tokenized treasury product. And then over time, we're going to increase the balance to also have USDE, which is their delta neutral stablecoin that most people know. It's the third biggest stablecoin in crypto. And the reason we want to be able to play with those numbers is to kind of generate more outsized yield, especially if we can find creative ways to kind of distribute that yield to partners, stakeholders, and anyone else that needs it. So our job is building the contracts, figuring out the distribution and the product integrations. Their jobs are bringing best-in-class expertise around stablecoins and managing the day-to-day operations. And by the way, the operations is no small feat, I should point out as well. You have to defend pegs. You have to ensure that the mint and redeem and the secondary windows are working at all times. And there's quite a bit of stuff under the hood.
Got it. And I think I saw in the announcement this is going to roll out sometime in Q4, and that's because you guys are going to build these preliminary contracts on Solana that make this stablecoin available. So all the minting and redeeming is still going to take place on Athena's side, but you guys are going to build the contracts to make sure that we can mint and redeem on Solana. Is that the right setup?
Yeah. So the mint and redeem will be for Jupe USD on Solana itself. They'll be based on Athena's contracts, of course, because we're using Athena collateral as the underlying. But there'll be our contracts for Jupe USD. So Jupe USD will be natively mintable and redeemable right there on Solana.
Got it. Okay. And when it comes to yield, I think this is what a lot of the users are looking for. We've got this pool of treasury collateral that's sitting there. These treasuries are obviously earning yield. What's the process to ultimately pass that over to users? Is it regulatory available now? Is there intermediaries that are kind of taking a cut of this yield? Can you just describe the process as we ultimately, we get the money printer printing money on these treasuries, but then how does that end up flowing into users?
Yeah, there are a few different people that along the way will take very small chunks of the yield. I would say, in here I'm talking like single bips typically, right? So typically whoever's managing that primary mint and redeem window or your primary custodian might take a little bit. 𝘸𝘪𝘵𝘩 and 𝘂𝘯𝘕 and those guys who actually create the tokenized treasury product that underlies it all, they might take a very small piece. But the vast majority will flow to us and Athena, and we have our own kind of private commercial arrangement on that side. In terms of kind of how it goes out to others, the Genius regulation that passed in America recently said you cannot be a Genius compliant stablecoin if you are distributing yield directly to users. And so I think on our end, it'll probably look a little bit different. In the JLP pool, for example, it makes sense for us to just like add in more money to that pool's rewards and to boost the native APY. I mean, right now I think it's like 45% or something like that. At other times it's down to 15%. It kind of varies, but it'll be kind of a consistent boost on that yield. And then there's other ways, right? We can take that revenue and perhaps do giveaway programs, trading competitions, rewards for stakers. All these kinds of things are on the table. We haven't finalized any of them just yet. But yeah, there's a bunch of different ways in which you can make sure that everyone is able to kind of enjoy the upside of that yield.
Beautiful. Yeah, I think this is an incredible innovation because you're also going to be bringing a lot of the products, the structured products like the 𝘠𝘪 from BlackRock Securitize that are currently underpinning Athena's stablecoin and helping to collateralize this industry. We're going to be bringing that over to Solana. Is there network effects that are going to kind of proliferate outwards from here? Obviously, there's minting and redeeming that's going to be taking place. Athena is helping with that. It's going to be taking place on Jupiter. But the stable coins could ultimately make their way out of Jupiter and into the rest of the Solana world, right? Like what would that look like, and how can you continue to bring value accrual back to Jupiter, even as this JUPUSD token ends up becoming composable with the rest of the Solana DeFi ecosystem?
Yeah, as my friend Lily, who's president of the Solana Foundation, likes to say, a good asset should be everywhere, right? Like that is what makes it a good asset. It has to be available and used by as broad a base of people as possible. And certainly what we hope for JUPUSD. So we'd love to collaborate with all other Solana projects on making sure that JUPUSD is available within them, whether it's as a collateral asset, a borrowable asset, as a trading pair, or whatever else it might be. From a yield perspective, it doesn't actually change. So much in the same way that Circle collects that yield on USDC, no matter where it lives, JUPUSD will do the same. So that yield will still ultimately be coming to our entities, and we'll have different ways to distribute it. And, there's a bunch of interesting ideas, and we've seen other like fun experiments for teams who might share yield with companies who hold that particular stablecoin on their balance sheet as an incentivization to hold their particular stable and increase TVL. It might be that we can use some of that yield to produce more kind of win-win situations with other partners, again, maybe cross-platform trading things or with meme coin communities or whoever else it might be. But the goal is certainly to have it be diffuse and everywhere. I would say we mostly think about this in terms of stages though, right? So the first stage is, hey, let's just get it to really work in our product suite. Let's make sure it's the stablecoin of choice in our lending product, in our perpetuals product, in our wallet products, while all other stablecoins are still available. Ultimately, going back to that idea of, DeFi is not like Apple, you don't want to constrict user choice, right? So USDC, everything else is still going to be there for sure. But what are the ways that we can nudge people to starting to use it? And then I think once we kind of figure out that first stage, once we have a little bit of lendiness built into the stablecoin, then I think we'll start to think about more aggressive growth and other broader plans. So our plan is not to try to dethrone USDC on day one by any means.
Okay, that makes sense. But it is gradual. And like you said, we've now seen a couple of these Athena powered stablecoin launches. We've seen how they can grow and how they can develop, and so we've got a little bit more of an understanding about how we can scale these stablecoins overall. I just want to quickly recap some of the things that you've mentioned. It's in terms of the integrations of the stablecoin across Jupiter's products, collateral on perps, liquidity in Jupiter Lend, trading on Swap Pro and mobile. And integration into new products that you guys are building. There's a little piece here, and I'm just reading off of Jupiter's announcement. It says a stablecoin for everything Jupiter, including Jup holders. This feels like maybe you're pointing or alluding to something. What could JUPUSD do for Jup holders?
I think it could do a few different things. At the risk of kind of front running our own announcement, I won't be super specific here, but I will say, like at the broadest level, Jupiter has a 50% Jup accumulation plan, where 50% of our revenues from Jupiter go to programmatic open market purchases of Jup via this thing called the litter box trust. So more revenues is good for Jupiter holders.
Every cat herder needs a litter box.
That's right. It's I swear to God, we made the decision on what to call it, or not us, but like with our partners, what to name it a few minutes before we actually announced it. And we're like, where does a cat keep his shit? It's in the litter box dress, right? So that's actually how that, and now it has like 125 million Jupe tokens or something in it. It's like little jokes that kind of get us through the day. Anyway, so it's great from Jupe holders from that perspective. It's great from increasing the brand trust, especially when you talk to TradFi and traditional capital allocators. Stablecoins is a narrative they understand. It's a narrative that helps build trust. And if you have a large stablecoin, that is great. And especially if we can get it up over $1 billion, right? Because Jupiter has 3 tokens over $1 billion right now. This would be our 4th. And so that's really, an exciting kind of way to ensure that awareness continues to grow and adoption grows of the rest of the product suite. And then finally, you can imagine that there are certain perks that we might be able to offer Jupe holders and Jupe stakers somewhat uniquely that other stablecoins cannot, right? Because we have this kind of vibrant ecosystem of stakeholders that we might want to reward in different ways.
Very cool. Could you just zooming out a little bit from the stablecoin in particular, for people that are just learning about Jupiter's ecosystem and kind of understanding the nuances, these three tokens, 4 tokens soon, over $1 billion market cap. Can you just describe how these tokens interact, how they work together to ultimately form this Jupiter universe?
Absolutely, yeah. So I call it the Holy Trinity right now. I'll have to come up with whatever a four-sided,
the
Holy Cube.
Four-sided Trinity.
Yeah, the Holy Square maybe is where we go afterwards. But we have not 3 stablecoins, but 3 tokens, right? So we have Jupe, which is the kind of primary token. That's the kind of governance and ownership token of the Jupiter protocol that receives 50% of the revenues that I mentioned earlier. That's market cap, I don't know today, but it's something in the $1.4 billion range. We have a second token, which is JLP, which is our perps liquidity provider token. That one is at about 2.1 billion. And then we have Jupe Sol, which is the highest yielding Solana LST, and that's at about 1.1 billion or so. They all interact kind of in productive ways, I would say. So Jupe Sol, not only does it give great yield to the users because we don't make any money on it, but it actually, the Sol goes to our validator. We have the second biggest validator on Solana is run by Jupiter. And that's really important because on Solana, there's something called stake-weighted QoS, which basically means the more stake you have on your validator, the more efficiently and effectively you can land transactions. And on Solana, that really matters because it's very fast and there's a lot of demand for block space and so on and so forth. And so Jupe Sol being so large actually makes the rest of the products better because we have a competitive advantage in landing transactions that other people cannot match. JLP feeds in because it's, by having such deep liquidity on JLP, the perps platform can offer massive size with guaranteed liquidity, right? Every trade that you open on Jupiter, you will be able to close. And that's not true for other perps platforms, right? Especially if they're order book based, especially if you're doing it size, and especially if you're doing it during volatile times. So that draws more people in as well. And then of course, Jupe itself is the thing that kind of accrues value across the ecosystem. And the better Jupe does, the more people know about Jupe Sol, the more people that know about JLP, and vice versa. So in that way, they all kind of support each other across the product stack.
Nice. Just looking at JLP now, this thing basically looks like the S&P. It's up and to the right, not financial advice.
I mean, listen, I don't give financial advice. I'm not trying to do that, but I will say that JLP is the most beloved token on Solana. If people who are watching this have not seen it yet, the alpha is the #1 most popular trade from liquid funds over the past year on Solana has been buying JLP and then hedging the underlying. So you have a delta neutral position. And JLP, I don't know what the number is, you can tell me. I think it's 40 or 50% APY right now. It's been as low as 14, 15%, but you get 15% risk-free if you run that trade. So people really love it at size, I will say. If you go and multiply JLP right now on Jupiter Lend, you get 220% APY, I think right now, something like that, which is pretty incredible. So it is a real powerhouse of a token. It's in my mind almost like the platonic ideal of what a token should be. Real yield, inherent yield. It gives you diversified exposure. It's very liquid, so you can get in and out of it. I don't mean to be too much of a sales guy. I just genuinely love JLP.
No, it's the philosophy background that's coming out. This platonic ideal of a token.
There you go. Yeah, I came to at least a few classes in college, I guess.
It makes a ton of sense. Is there a benefit that by running the Jupe USD stablecoin and deploying this and getting this to scale, will it help this trade, this looping strategy that you're describing on JLP?
Absolutely, yeah. So it'll help because it'll add in additional yield native. So most of the yield in JLP comes from perps trading fees. 75% of all perps trading fees, and again, we're the largest perps product on Solana, they go to JLP holders. 25% comes back to the Jupiter protocol. But in addition, we actually have a JLP loans product. So if you have JLP, you can borrow USDC against it at really competitive rates with like a 95% liquidation threshold or something like that. And we actually native stake a bunch of the SOL that's in the JLP pool that's unutilized by traders to our validator that again generates extra yield. If we replace USDC with JupUSD inside of JLP, it'll only further increase the yield. Now, the exact percentages and how that breakdown is going to happen, we haven't figured out yet with the JLP community. So there's still conversations to be had there. But that would be one additional way to ensure that, hey, even if trading volume goes down, you still have loans providing lending a yield to it. You have native stake providing yield to it. And now you have a stablecoin yield coming in as well from treasuries. So that's the way that we kind of ensure that JLP remains robust. And again, the more robust it is, the more perps trading happens because it's deeper guaranteed liquidity.
Very cool. Very cool. Cash, man, it's been so much fun. There's a couple more things I think our team's got teed up in the back, and it has to do with this announcement video where you made an impressive debut as an actor. Let's see.
The JupUSD announcement video.
Yeah. Can we play this? I think our team has it ready. Gosh, I'm sure you've seen this. If you click on the output in the bottom left, you should be able to. I think we're gonna be playing here in just a moment.
Like it's actually crazy. You know, it's like biggest Solana DeFi protocol, fastest growing stablecoin, best of both worlds coming together. Like I swear to God, dude, DeFi up only from here.
I swear to God, DeFi up only.
Are we ready
from here. I'm ready to go.
Yeah, I will.
I'm Guy, founder of Athena. At the moment, sort of Athena's balance within the market is roughly around 5%.
Me and Guy got together at 8 a.m. during 𝘗𝘳𝘧𝗏𝘗 2049 because we both had like very busy days afterwards. The video was unscripted. We just kind of like rocked up, had some coffee, and then just said, "Okay, let's shoot." This is what came. So I'm talking to Guy off camera here, basically, and then I just kind of freestyled on the other end of it.
Are a critical component of that.
So
we couldn't ask for a better partner than Athena in this, right? They've been blazing.
This is your cameo. This is
taken
Hollywood's looking at this right now for your next role.
This is two top tier.
Can I tell you, actually, it's a real problem. I'm flying to Bombay on Friday night to do a shoot, which will be my first like on-stage shoot with like a full cast of characters. So if you like the Cash Donda acting career, stay tuned to Twitter. You'll see more of that soon.
Ooh, there you go. Let's go, Cast Cash.
Market, I think estimates are around 20 to 25 trillion.
It's a lot of fun to make. Shout out to the boys at GOATfish who put this together for us as well.
Okay, GOATfish. That's a baller name right there.
Exciting to us.
Yeah. And what's it like been working with Guy? I mean, he's obviously just a savage killer. I mean, when it comes to stablecoins, built the third largest stablecoin. You guys working together now. What's that experience been like?
It's also about making
the rest of the Jupiter products. Before I only have known Guy since we started working together, so I've known him for whatever a month or so. Before that, I admired him. I think like anybody in crypto admires Athena is like one of the best executing products in the space and one of the best executing teams in the space. And I found him, like as we work together, to be an exceptionally clear thinker, a great partner. There during the negotiation phases, there were a number of sticking points. Like we both have different kind of objectives that we wanted to try to meet in the middle. And I found him to be like very understanding and kind of open about what his aims were and kind of what was needed on our end. And just like the way that he and the rest of the team does business. Nick and Jane and everybody else there too.
Yeah, absolutely. Very, very cool, man.
I will say, I don't like standing next to him though, because he's like a very, beefy, jacked guy. I assume he's like one of those like 5 a.m. ice bath kind of guys. And like, I'm not. So like when we were next to each other, like for the recording, I was like, I just keep him in a different frame than me. I don't want to, my vanity cannot take it.
Man, oh, it's so funny. I love it. Cash, it's been an absolute pleasure, man. I feel free to wrap us up. We do have, if you got another minute, we've got a question from the audience here.
Sure.
Let's see how much alpha we can share. Okay. This guy, new type, hit us up in the chat. He said, could Jupiter take a page from Binance Alpha? Example here. I stake Jupe and can get airdrop some of the most successful meme coins that get launched on Solana.
I will say that we already have some of that. So Jupe stakers got access to the 𝘗𝘳𝘴 presale, which by the time it opened up was something like a 5x. because they got in at a $75 million valuation, FDV. So that worked out great for them. 𝘗𝑒𝑘𝑡, which is a brand coin people might know. People got an airdrop if you were a Jupe staker. And then most importantly, the 𝘬𝘪𝘴 TGE is happening tomorrow. 𝘬𝘪𝘴 being the top AMM on Solana. 3% of the total supply of MET is going to Jupe stakers. So if you're a Jupe staker, you will be rewarded. But I'll give this a little bit of alpha. ICOs are very hot right now. We've been working for months on an ICO platform that's going to launch in November. And the first launch is going to be coming up, I think, in mid-November, roughly. And I think Jupe stakers will be very excited about it. And so as we have more ICOs, I think Jupe stakers will continue to be excited about what we're trying to do.
Wow. Guys, Jupe stakers are winning. If you're not staking your Jupe right now, I don't know what you're doing. You should probably hop on that. It might already be too late, but maybe Cash can squeeze you in.
Yeah, I think you have some time before the November one. I think we'll take a snapshot a little bit closer to the actual date.
Okay, there you go, guys. If you're not already staking Jupe, we know how much the last ICO platform got acquired for. This one coming up is going to be just as exciting. And so, yeah, there's new type in the chat. Dang, I need to stake Jupe. Come on, man. Let's go stake your Jupe. Shout out new type. There you go. Draw the alpha out of Cash. Wow. Cash, you're the chat of the day. Drop an alpha. Everyone comes on and they're like, oh, I don't want to run the announcement. I don't want to drop too much. I don't want to say too much. Cash comes on, drops bombs. There you go. Stake Jupe, no doubt.
My pleasure, man. It's the benefit of being up for 14 straight hours working, I guess, is maybe my PR filter is not what it would have been in the morning. But
absolutely
that's
not.
fine.
This is the result of shipping and testing and prod, as we do in this industry. Cashman, thank you so much. Absolute pleasure. Best of luck. 𝘬𝘪𝘴𝘬 TGE tomorrow. New ICO platform in November. And Jupe USD launching Q4 in collaboration with Athena. Keep up the great work, man. It's absolutely cool to see the progress.
Thanks, buddy. Likewise. It's been great to see the roll-up continue to grow.
Appreciate it, man. We'll have you on again soon. See you next time.
Please, anytime.
Love it. See ya.
Bye, man.
All righty. Wow. Banger. I think we're gonna keep things moving. Yeah, that was great. I think we're gonna hit standby for just a moment so that we can get things reset here. Always love these stablecoin conversations. Just even though we've got so many different stablecoin options here, we've got all of these different architectures, these different structures, the different ways in which these stablecoins are composable with one another, how they fit into the broader DeFi landscape. Very, very cool and exciting to see the stablecoin landscape evolve. Let's keep it moving. Leo, let's hit standby for just a moment. We'll get things reset and we'll keep moving with our next guest, Mike and Will from Galaxy. Don't miss it right here on the Rollup TV. Coming right up. We're back. We are going to get Will and Mike, the GPs over at Galaxy Ventures, up in just a moment. Pretty exciting times. We're going to hear from them about market commentary. Obviously, quite the turbulent market conditions over the last couple of weeks. We are going to hear about how they're looking at stable coins. This is, absolutely timely. And their fund strategy, which portfolio companies are they most excited about and why. They just closed a $175 million venture fund. We want to know about the possibility of how liquid market fluctuations are going to affect the venture portfolio. These guys have been bearing with us in the back, and we really appreciate their patience. So I think without further ado, we're going to bring them up. I spoke about earlier in the show, Galaxy released their Q3 earnings. Here they are, guys. Thanks so much for being here. Welcome to the show.
Thanks so much. It's really nice to be here. Super big fan of your podcast and what you guys have done. So thanks for having us.
Yeah, excited to be here.
Absolutely. Thank you guys so much. I know it was a bit of a whirlwind trying to get you guys set up. The IT department over at Galaxy does not mess around.
nothing like crypto IT, IT to protect against a crypto podcast, right?
Exactly. That's what we need our crypto protections for. The Lazarus group got nothing on us over here. So
Rollups gonna be fine.
All right, guys. Well, it is a pleasure to meet you. You guys are GPs over at the Galaxy Venture firm. Recently announced a $175 million venture fund. Really, really exciting stuff. Maybe you guys could just talk about what the process like raising this fund was like. You guys are huge, in the space. So I imagine that when you're going out and you're talking to capital allocators, maybe you guys have a little bit of an easier time than the rest, but all of this is somewhat dependent on market conditions and the market cycles. And we're certainly at an interesting time in the market these days with Bitcoin, with the rest of crypto. Can you just walk us through what the process of raising this $175 million venture fund, kind of what were some of the trials and tribulations, any stories that you can share? Generally, how was the experience of raising this fund?
Yeah, I'll start, and then Mike can finish what I leave off. I think we're really fortunate in a lot of ways to have the backing of Galaxy. I've been with Galaxy personally for the past 6 years. We were investing, by way of history, investing off the balance sheet of Galaxy for 6 years, from 2018 to 2023, and so we had developed a track record. I think we had developed an ability to sort of compete in deals and identify and get access to interesting opportunities over the years. I think there's always a trick, which is being part of a larger organization. Does the market understand you as a venture fund? Does it understand you as a strategic, as a trading firm? I think we benefit from being strategic for portfolio companies, literally for portfolio companies. Every business in the space, the different business lines of Galaxy, they're one hop away. It's a ping and it's an integration with the rest of the firm. And so there's a lot we get out of that. There's also kind of the broader, capabilities and relationships and connections in the space that, make the sales and kind of, fundraising process a little bit easier. But at the same, on the same token, Mike and I are both first time GPs with external, managing an external fund, which requires a little bit of additional underwriting and diligence for LPs in that context. I also think the market from a fundraising perspective was a little slower for GPs over the past year as a result of kind of maybe LPs feeling burnt after 2021, 2022 kind of era. So, there's a good bit of push and pull. I think the thing we've done well is identify that our thesis is sort of uniquely focused on the intersection of financial services and crypto, which has really clarified, one, our ability to win deals, and two, the kind of exposure that we're going to bring to an allocator's portfolio. They know what types of companies and opportunities that they're getting exposure to. So I think that all kind of came together, the push and the pull of that to lead to, in our view, what was a successful outcome for us. So I don't know, Mike, what would you add to that?
Yeah, the experience was interesting because we started in the beginning of 2020 2024. So the fundraising process takes a long time. And given how fast crypto moves, a lot has changed, right? And so when we started having our first conversations with folks, we were talking about stable coins and tokenization and how financial services is going to be replatformed onto blockchains. And people, you know, a lot of allocators kind of stared at us. So like, I hear what you're saying, sounds really interesting, don't really buy it. And you know, one of the fortunate positions that we were in was we were able to leverage Galaxy and our ability to deploy into you know, a handful of deals and show our work, right? Show people how this is playing out. And now, you know, those conversations when we were going back in 2025 at the beginning of this year, and saying, look, like, you know, here we were talking about how these trends were going to impact the world. Then it's actually happening. It's happening faster in a more pronounced way than we even talked about, you know, 12 months ago. And so I think that built up a lot of confidence, and we're super thankful to our partners in this fund. And we're excited to build a top tier venture platform here at Galaxy.
Yeah, absolutely. Given that you guys were started raising this in 2024, and you know, like you said, you know, this space moves so fast. Was there sectors or categories of companies that you were bullish on and you were speaking to investors and LPs about back in 2024, and then fast forward to 25, and those are no longer relevant, or you guys have sort of shifted the thesis a little bit? Maybe you can describe the evolution.
Yeah, I think that's a really interesting realization that we came to, which was like, I'd say the number one thing we had identified, even going back to sort of middle of 2023, was that stablecoins were going to totally eat cross-border payments. Stablecoins are extremely good for moving money across borders. They're actually they're not that much of an improvement for moving money domestically, because domestic payment systems tend to be settled with the central banks. And so those tend to be fast. And then cross-border systems are essentially interbank, which require a ton of reconciliation and settlement between, you know, banks globally. And so SWIFT payments and stuff like that move quite slowly. It's expensive, et cetera. So I think we had a view that stablecoins were going to disrupt cross-border payments, and that was going to be like a big theme of the fund. And I think that we were right in a lot of ways. We led an investment in a business called Layer 2 at the time, which became Rail, and then they recently got bought by Ripple, you know, over the summer, you know, which was a good investment. I think the thing that surprised us was the degree to which actually crypto settled cards may have been the bigger category in this kind of payments space. This concept that like a user who wants access to dollars over the internet, i.e. via stablecoins, could then convert those, you know, dollars into you know, an actual spend with a local merchant via the Visa network, was maybe the much bigger opportunity. So as the space became very competitive in cross-border, we saw the emergence of a big new opportunity in these kind of crypto settled cards. I think over the last year, we made investments in Rain and a business called Rollup Pay based out of Hong Kong, both of which have, you know, been really interesting in a lot of ways. And so I think from the time you sort of state what your thesis is to actually deploying it, like some of the trends are changing. I think if you're consistent with like financial services, disrupting financial services is a two-decade opportunity, and you're confident in that, like you're going to find new pockets of opportunity that pop up over time. And so I think, you know, that's certainly true. I personally focus on maybe some of the more crypto native adjacencies to traditional finance, so kind of on the DeFi side and the protocols and whatnot. And so there's interesting ways that those will eventually converge with kind of neo-banking and stuff that really is starting to pop up now, but is not sort of wholly explored. So I'd say that, yeah, there's transition, there's kind of ebbs and flows of your thesis, but as long as you maintain a strong, consistent secular thesis, you're going to be well positioned, I think. Yeah.
Just from first principles, like if you just take a step back for a second, what we're looking for are very large profit pools right? And within financial services, there are many. We're looking for complicated financial transactions where there's a lot of intermediaries and there's a lot of inefficiency, both from a capital perspective, but also from a processing perspective. And you know, the more jurisdictions, the more intermediaries inside a financial transaction, the more complicated, the more kind of inefficient and costly that process is. And so when you think about, like, you walk into, you know, a store and you swipe a Visa card, you know, we take for granted all the things that happen behind the scenes. But what blockchains are uniquely good at is cutting out those intermediaries, right, allowing the parties to start to interact on, you know, a more direct basis. And that cuts out a lot of the costs, improves the capital efficiency, and you can apply that to not just cards, but, you know, cross-border. We'll mention cross-border payments. There's a lot of other financial products that have the same principles, and so our approach has been just be thesis first. You know, try to find the transactions and the use cases that are most problematic, and then, you know, try to find great entrepreneurs to go work with to solve some of those problems.
Is this the thesis broadly? Essentially, you try to pinpoint where the most complicated financial transactions are. We detect the intermediaries, and then we understand where crypto and blockchain can fit in to remove those intermediaries and make these systems more efficient. Is that generally the thesis of the fund, and you're targeting cross-border, you're targeting remittances and payments? When it comes to stable coins, you can be more selective. Is this broadly the thesis for the fund, or you guys, is that maybe one sector and then you guys are, there's some complementary pieces to it?
Yeah, that's a little too narrow. I think the broad focus is how are financial services being disrupted, right? And so we're talking about payments as kind of one use case. We think the asset management industry is coming on chain, and we're moving from stable coins, which is essentially tokenized fiat currencies, to yield-bearing assets and a bunch of other assets, and maybe we can talk about that. Banking is I won't say being disrupted, but is being augmented in a very serious way, right? And maybe we can double click into banking. But at the end of the day, we're looking for technology and kind of regulatory wedges in financial services, right? That can be leveraged and used by startups to attack profit pools, right? That's, at the end of the day, that's what we're focused on. And all of these industries are grappling with how to adopt crypto assets, how to adopt crypto rails to make their businesses more efficient. And so, you know, we're not only investing in companies who are trying to disrupt the incumbents, but also companies who are selling services to the incumbents, right, as a way to help them innovate. And so we just feel like being positioned at the center of really the crypto native products and services that are happening to the traditional financial folks, and kind of sitting in the middle, a lot of good things will happen there with that positioning.
Mike spent 8 years in fintech before, essentially fintech venture before coming into crypto, and he jokes like, this is actual fintech, right? This is actual technology behind finance, not just the sort of the reskinning of sort of experiences on top of banks, right? So I think there's real, you know, fundamental phase shifts happening with blockchains, because you've got this shared and ubiquitous ledger in a way that, like, banks and dealing with the sort of traditional banking system, it's a totally, each bank has their own ledger, and then the goal is to reconcile with each other. Those are fundamentally different sort of substrates and models, and just a lot of change is going to come out of that. So we have to be aware of all of the protocol innovations that are happening at the underlying layer, so that we can have an informed view of what financial products and financial use cases are, you know, are viable as well. So we're not wholly focused on just the financial applications. We want to invest in the entire supporting stack with an eye to how it's all going to play out from a product market fit perspective in the financial services industry.
Yeah, absolutely. Switching gears a little bit here, I'm curious because I actually yesterday got an email about Galaxy's third quarter earnings results. Had a quote from the founder, CEO, you guys, of Mike Novogratz. Third quarter was the best quarter in Galaxy's history for 8 years. We've been building a brand rooted in confidence and trust, and in Q3 it all finally came together. I'm just going to shout out a couple stats, and I know you guys are on the venture side. This is on a little bit more of the operations side, but quarter three marked the strongest quarter in Galaxy's history, generated over $500 million in net income. Assets on the platform reached a record $17 billion. You guys had an execution of an 80,000 Bitcoin trade. You guys helped facilitate that. There were several other landmark achievements that you guys had on the operational side. How does Galaxy's day-to-day operations, liquid side, and facilities help to augment and facilitate and support what you guys are doing on the venture side? Did it help you raise our companies leading into and essentially looking for capital from you guys as a means of getting involved with the rest of Galaxy's business? How did these things complement one another?
I think it's like, I mean, I've been around 6 years, right? So I have a lot of sort of historical context to speak from here. As a firm, we're executing very well, right? Like, and I've seen the last two to 3 years, and like I've seen just the trends and things change, and everybody's sort of really hitting their stride in their individual business line. Like what I say when we talk to founders sometimes is, look, we're not a 20-person VC firm that's managing 250 million in AUM, right? Fundamentally, it's a different model. It's the VC side of things is 10 people, but the entire operating business is 700 people, and everybody in the other business lines is at the frontier of their particular business line. Whether it's staking, we're one of the largest validators on Solana. We're very active on Ethereum. We've got real expertise there, especially with respect to kind of the financial products you can build around staking, how to use it as a form of collateral. When you talk to even our finance team, right, who's actually just doing the books and records, like how do you account for, DeFi activity on chain? How do you account for token movements? How do you discount the value, the mark-to-market value of a token based on the liquidity schedule? So like everybody across the firm is sort of operating at their own little frontier, and they're forced to because there's so much new stuff happening in the space, and we just kind of have to learn by experience and trial by fire, and you kind of grow and get stronger over time as you do that. And so I think our portfolio companies historically and today have benefited from the expertise, at the firm. I mean, a famous story is Fireblocks, right, which we were a Series A investor in. They were coming in, their CTO was coming into our office to work with our head of operations to, get product feedback, because they're the ones actually moving the coins around and doing end of day settlements for our trading desk. And that's like a really rich source of information and product feedback for companies. And, every company's different. Not every company's going to be well integrated with our operations team, but, they might be well integrated with our lending team or get benefit from our, advisory and sort of banking capabilities. And so there's a broad world. I think, it's a hypothesis I have. I think if you reran venture, it was only focused on one industry, like if it was only ever focused on chips, it wouldn't be surprising to me that some of the most competitive venture firms actually would have totally vertically integrated chips operating businesses. It's just that generalist venture focuses on a broad swath of industry, so you can't be so targeted. I think crypto's a big opportunity in itself. And so I do think this kind of vertically integrated venture model where you have an operating business plus really good, capital allocators to make investments is a potentially great model in a specialist industry. And I think, we want to continue to, build momentum and benefit from, bear the fruits of that thesis. But, that's what we're excited about, I think, and what we like about Galaxy. I don't know, Mike, what would you add to that?
It's the best part of the job. Just say that, right? Like the best part of the job is helping our founders do things, especially things that other firms don't have the capability to deliver on. And, we're working hard to productize that as much as possible for our founders. And so many of our portfolio companies are working with Galaxy well beyond just equity capital investments from the ventures team. And you know, I've worked at other venture funds where, and every firm has their own kind of, you know, way to differentiate. I see every day how our team, our company is working with our portfolio companies to help move the needle for them, and vice versa, right? So there's a real symbiotic relationship between our portfolio companies and the various business lines that we have across the firm. And I'd say the coolest thing I've seen in my 3 years at Galaxy is just the, you know, traditional financial services firms coming to Galaxy and also looking for help and guidance and to help them navigate this, you know, the trends that we talked about, right, at the beginning of this conversation, right? When you have a State Street or a Bank of New York, or, you know, you name your big bank financial institution, there is a real connectivity that Galaxy is providing, not just to our business units, but also to our extended venture portfolio. So that's when it works out, you know, magic can happen. So we're excited about that.
Yeah. You also highlighted some of the categorical advantages that you have as a firm that take you beyond a capital allocator. This is your operating experience, the connections that you have in the industry, and you mentioned that you're working to productize these. Can you just say more about this? What is that going to look like in practice when it comes to the value that you're providing to the portfolio companies or the market in general as you productize some of these more qualitative characteristics of Galaxy? Can you just make that a little bit more tangible?
Yeah, it's hard to plug our portfolio companies to every opportunity across the firm when the firm is expanding so rapidly. I think we're trying new ways of you know, understanding what our business units are working on and looking for, and we're also spending a lot of time with our portfolio companies figuring out, you know, what they're looking for, whether that could be, you know, Galaxy becoming a customer, or, you know, they need a credit facility to help them scale, or, you know, or something of that nature. So it's really just a kind of a matchmaking role that we're trying to play here a little bit, where, you know, we have kind of problems on both sides that if you put them together, they help solve each other. So we're just in an interesting position, you know, aggregating a bunch of the things that our colleagues are facing, and coming to them with solutions and you know, that our portfolio companies are offering. So it's just streamlining that, right, as much as possible to the advantage of Galaxy and to our portfolio.
Yeah. I'd love to double click on one of the sectors that you mentioned that is taking hold and a real focus of the firm and you know, the venture portfolio, which is banking. And you guys have experience in this, you know, broadly financial services, but in particular banking. As you guys are looking at the current DeFi landscape and you see, you know, Wall Street just coming in, you know, with respect to RWAs, stable coins, how do you think DeFi is going to evolve? Are you anticipating that we're going to see incumbent Wall Street institutions build out some of their own solutions? Are you thinking that, you know, they're gonna deploy on some of the existing DeFi solutions that have product market fit? We've seen Maple and Aave get a ton of traction. You know, the old adage is you know, which can happen first? The newcomers, you know, can they get distribution before the incumbents can improve their technology? Where do you see this balance right now, and how do you see things shaking out?
Yeah, I mean, look, I think it's a great question. There's a lot there to answer. I think we think if you could replicate, like, take the consumer banking experience, right? Like, which is like, let's open your Wells Fargo mobile app for like the average consumer. Like, what do you get? You get, like, theoretically interest on deposits, albeit like you actually don't get interest on deposits. You get, you know, you get offered cards, and right, you get the ability to spend cards out of your electronic deposits, right? both debit and credit cards. You get, you know, the ability to theoretically like take a mortgage, right, and like have an offering, for a mortgage and borrow from the bank or borrow from a partner of the bank. And then you've got sort of connection to the payment system via wires and ACH and stuff like that. Like, there's not that much more that the consumer gets from their sort of consumer banking experience. I think one of our hypotheses is, like, over a multi-year time frame, the DeFi and sort of a modularized version of DeFi can actually compete with that stack. I think there's other companies in the market that have said something like this, but Plasma came out obviously with a neobank, but I don't think Plasma is the only one thinking about this. I think all the exchange wallets are thinking about how to look more like fintech apps. Meanwhile, you've got Revolut and others, and Nubank looking how do we get more into stablecoins and crypto. So I think everybody's sort of on a three-way convergence in a lot of ways between the exchange, the wallets, the exchange wallets and the major wallets, the traditional and existing fintechs, with a lot of distribution, and then like the kind of emergent like crypto startups. You can think of these as like the card startups like Rollup Pay. They're all kind of, I think, headed on a trajectory towards each other. And I think net, once they have sort of product, feature completeness, they look a lot like, like your Wells Fargo digital bank. I think emerging markets will take to this faster because there is that stablecoin distribution and adoption. I don't think, I think the actual being able to hold a US dollar and then in an electronic kind of deposit format via stablecoin is like a really good value proposition for a consumer in emerging markets, more so than a consumer in the US markets. I think interest on deposits will eventually, it's been a big form in a type of debate, between the regulators and the legislators and the industry, whether we can really get yield on stablecoins and what types of yield are allowed and whatnot. And so that'll all be sort of adjudicated over time. And then I think with respect to your question of like the incumbents versus DeFi is really prone to network effects. Once you get instantiated as a DeFi protocol and you get integrations, and you have capital in your pools that, brings and is able to sort of deal in size. Like if you look at Aave, like I think they've crossed 50 billion in deposits. That's real scale. I think it's going to be really hard to compete with something like Aave because the cold start and the network effects that you have to build to compete are really material. I think you look at Pendle, like with a really interesting product there, like the degree to which they've probably got network effects around some of the yield, the yield splitting products. Athena, certainly with all the integrations that they've gotten in between Pendle, Aave, Morpho, et cetera. So I think it's a network effect prone business. Certainly people with distribution can make attempts, but I think most of the TradFi space is looking in at like what's happening in DeFi, and they're identifying some of these key players, and like they're more likely to partner than to like build directly and compete in a lot of cases. And I think that only starts to strengthen the network effect over time. So I think if you can get that level of stability and robustness in DeFi, where you're kind of now compounding, I think some of these winners will compound for like a real pretty long period of time here. So yeah. Mike, I don't know, anything else?
Yeah, as Will mentioned, there's a lot here to dig through. A few things I would mention is one, like if you think about just the fintech neobanking market, right? There's been a few $100 billion of enterprise value that has been created. If you just take Nubank and Revolut, there's probably 150 billion of enterprise value just between those two companies. And if you think about what they've done, it's like, okay, we can now, there's a mobile application, right? There's a mobile experience. I no longer need to walk inside of a branch, right? There's digital account opening, and there's not that much. And they kind of decided we're not going to nickel and dime our users on fees like the TradFi banks are doing, right? So so much value has been created, and financial access to these products has improved tremendously, but not that much innovation. It's never been easier today to layer in financial products, right? Mm-hmm. It's never been easier. The embeddable nature, the composability, cross-border by default, right, nature of crypto and wallet-based products is transformational. And ultimately what that's going to do is going to create a lot more competition, and it's going to create better outcomes for users and businesses, right? So like all of that is the backdrop, which is really exciting. The one other point I'd make on banking, in sort of in a positive direction for the incumbents, is they have tremendous distribution, as you called out, and stable coins also create opportunity for them too, right? So they and banks love FX, right? They love being able to take one currency and convert it into another currency. When you think about where we're going in the not too distant future, is stable coins are going to be ubiquitous. You know, it's 1.5% of money supply in the U.S. today, which is small but meaningful. And if there's a number I could bet on, it would be that number is going to go up significantly over time, right? And so as that happens, there's a huge opportunity for banks who already have a lot of these relationships to effectively catch stable coins and convert it into fiat, right? And so this is sort of similar to traveler's checks and some of the other modalities of financial products and how they've evolved over time. But the same thing's going to happen here with stable coins. And so there's going to be tens of billions of dollars of revenue opportunity that is up for grabs, you know, for the incumbents. And so it'll be really interesting to see who's on the front foot and where they're going to place bets, what new businesses they're going to open up to try to remain, you know, not only relevant, but hopefully to be a growth driver for those businesses as well.
Yeah, I'm glad. I think that's a perfect segue into this next thing that I want to talk to you guys about, which was this Fed Payments Innovation Conference that happened just a couple days ago. And I think, you know, this kind of caught a lot of people by surprise, the conference itself, but also the level and the extent to which Fed Governor Waller had experience and expertise that he was talking on some of these issues. He also announced what I think is a pretty substantial announcement in terms of starting to explore, and if it ultimately does come to fruition, these skinny Fed accounts or these skinny master accounts, so that stablecoin issuers could go directly to the Fed. They could hold cash there, and then they could, you know, my understanding is that they could buy treasuries directly in Fed auctions. Could you just help clarify what exactly happened at that conference, if you guys are aware, and generally what the significance of the industry and specifically the significance that it has for stable coins is?
I was not in attendance, so I can't speak to the specifics. I obviously saw a lot of the commentary coming out of it, and it was just interesting, as you said, like, you know, 90% of the conference, it felt like, was talking about stablecoins and innovative things, right? Whereas, as you said, you'd be kind of hard pressed to find too many other Fed-driven conferences talking about innovation in the past. But I think it fits into this administration. It fits into the regulatory posture, you know, since January, right? And the impact that it could have on our industry. I would say that there's a number of, you know, Genius is passed. There's still a lot of questions around how Genius is going to be interpreted, and Galaxy is involved right now to, you know, help with helping craft the guidance. There's an open comment period right now that we're engaging in. So there's a lot of things, whether it's with Congress, whether it's with regulators, whether it's directly with the White House. There's a lot that's happening that need to have kind of our fingerprints on and working on behalf of our portfolio companies to help them be involved in and shape, right? So the comments at the by Governor Waller the other day is just one specific example of that.
Yeah. Will, anything there? I mean, did you have a chance to catch it?
Yeah, the last couple of days are crazy for me a little bit, so I don't have any deep thoughts on it. I think it's not that's surprising that the Fed would want stablecoin issuers to have direct access to the Fed. I mean, it's just like for them not to have direct access to the Fed, at least in a sort of skinny capacity, as they say, is like could be a financial stability risk in some respects, right? Like it's being essentially intermediated by other banks, and those other banks have their own profit motives and whatnot. And like if stablecoins are systemically important, it makes a lot of sense and the U.S. legislators are supportive of allowing stablecoins to exist inside of the U.S., i.e. the Genius Act, then it makes sense for the Fed to have a direct line, direct relationship with them, especially at the scale that these, issuers are buying U.S. Treasuries, and so, yeah, I just think more cooperation with the issuers of, and the government, both the Treasury and the Federal Reserve is sort of necessary and smart, as opposed to the opposite approach, which was historically taken, which is like, no, these things don't exist, they shouldn't exist, and we're going to sort of, try to fight them at every, at every angle. So
willful ignorance,
yeah, like I just think it's especially when these issuers are sort of evangelizing like the U.S. national interest, right, in the form of dollar adoption and purchasing of U.S. Treasury bills and whatnot. So I think it's smart to allow them to come into the fold a little bit more. I'm not surprised at the degree to which the Fed governors and other folks around the Fed are super educated about these these topics. Like these are fundamental financial innovations, and I think they're worth taking seriously from a plumbing perspective. And I believe that the smart people at the Fed and in the sort of academia surrounding the Fed are definitely taking them seriously. It's a fundamental phase shift, as I said, in how markets and settlement works between financial institutions, right? You have shared ledgers rather than discrete and individual ledgers that you have to reconcile with. Like that seems really important. And so I think people are trying to work through the consequences of that. So yeah.
I would just add one more point is like, as we've invested in dozens of companies now that are operating at this intersection, they're using stable coins to do something interesting with, they're always bottlenecked by banking, always. And it's going to be really exciting when that bottleneck no longer exists. And I think it's a natural place for regulators to not just allow innovation, but encourage innovation, because as a narrow bank, you're the risk profile is a lot lower. And so I think if founders are on the side of taking low risk, making low risk moves to improve, make improvements for users, i.e. like being able to share more yield with users on deposits and being more of a transactional bank rather than one focused on credit and lending, that is a very good sandbox for entrepreneurs to be experimenting with.
Yep. Yeah, guys, thank you so much. This has been an absolute pleasure, and I appreciate you taking the time, spending time with us. Just some closing thoughts, just, as we wrap up. Feel free to take us home here, Will and Mike, GPs, Galaxy Ventures, any through lines or trends that you think are important calling out here?
I would just say there's a few $1 trillion of market cap that's focused on financial services around the world. These are some of the biggest profit pools, makes up huge portions of the global GDP. And it's never been a better time to be founding a business, to be layering in these financial products and, across, it's not just fintech, but fintech's going to be embedded everywhere. And as Will said, I've been following, these trends for a long time. And I feel like now the floodgates are open. And I'm very interested to see, there's a lot of different analogies that people use, but it feels like, dial-up internet, dial-up AOL, where, in the early 2000s and broadband is here, and the kind of the open financial system is really poised to take off now that we have the right regulations and support in DC. So couldn't be more excited for what lies ahead.
Yeah,
I'll let Mike kill it there. That he put a good cap on it.
I love it. Yeah, it really does. It feels like we're at an inflection point where it's a greater risk to these incumbents to not come over, experiment, put at least some portion of their balance sheets on chain and start to dabble in this industry. And that's how it starts. And ultimately that's where we're headed, is that trend accelerating.
Yeah, I guess I do have a final point, which is like the way you think it happens is never the way it actually happens. And it always surprises you. Like, so I think we're like expecting this all to play out, but like the ways and the specifics of how everything is going to happen will inevitably surprise us at the same time too. So I'm looking forward to the ways in which we'll be surprised over the next couple of years. Same here. I think expecting a surprise is the way to be, and then remain adaptable and survive through it. So guys, thanks so much for joining. Really appreciate you, getting set up behind the scenes and also spending the time with us today. Really appreciate it. Thanks for having us. This was really fun. Yeah, we'll see you next time. Next time there's a 100x in the Galaxy Portco, we'll get you guys on with to talk about it. Okay. Love it. Thanks for having us. Bye-bye. See you next time. Cheers. Banger. All right. Man. Quite the stream. I think we're gonna close it right there. I mean, there's not much else to say. Will and Mike on the Galaxy thesis. These guys just sprinted all the way through. Talked about the Fed, skinny accounts. We had a great deep-in conversation with Santi and Mike. Man, there was a ton of alpha. If you caught the Jupiter COO Cash talking about stake Jupe, you want to stake your Jupe. They have a launch coming up in November. Make sure you can still qualify for that one. And then obviously Meteora launch tomorrow. Jupe stakers are going to be rewarded as well for that. Galaxy is continuing to do very well in the public markets, and there's tons of alpha to dissect from Will and Mike. Just before, guys, thank you so much. Banger stream. We've got a ton of action. I think we're going to get Hasib on tomorrow. That one is going to be a guaranteed banger. That's it. We're cooked. I'm done. I'm cooked. I'm going to see you guys next time. Shout out everyone behind the scenes. We'll see you tomorrow. Same time, same place. Rollup TV. Don't miss it. Peace.